Good evening, everybody. Morning. Get started here in just a second. Good evening, everybody. Morning. Get started here in just a second. Let's get ready to party. Woohoo! Yo, everybody. My audio is all messed up there. Okay, I think I'm good. Check, check, 1 2 1 2. Check, check, 1 2 1 2. Check, check, 1 2 1 2 3 4. 56 27. Ho! Hello, everybody. What's up, 69 Conquer? Good morning. Good morning. Good start to the week. I was up early in the morning, gymming it up. Gymming it up. What's going on, everybody over there on the tube of you? Yellow, hello. What's up, Daryl? What's up, Nick? What's up, Phenom, Vidor, Chris? Welcome to the newsroom. What's up, Blue Mammal? Otter? What's up, Otter plus Charles, Chris? How's everyone doing? Good morning. So guess what's going on in the markets today? You said it in the comments already. It's the great rotation. It's the great rotation going on. How can it be that the market is down? The Qs are down. Barely. All right, listen, we're gonna hop in. We're gonna take a look at the market, see where we're at, take a look at some stocks and go from there. Minor pullback in the markets so far, to be expected, to be quite honest. So no surprise there. It's the end times? No. Not now. Not now. Sorry to burst your bubble. Just sitting on the hands today? Nice. Let's see if there's any good setups in the making here. What's up, GT? What's up, Tech? All right. Okay, so let's start off really quickly. Okay, so first off, I want to just bring up the SPY. How's the SPY doing? The SPY's up, right? Up 26 basis points, not much of anything. What's holding the market back? Okay, Qs, tech, right? Down 0.5%. So what is actually holding the market back here? Well, let's look at the S&P 100 right over here, okay? What would actually be holding the market from screaming today? Right? We have Nvidia. Okay, Nvidia is the most important stock, arguably, in the stock market. Okay, is it still the #1 market cap stock? Probably not. Let me see. Come on, Thinkorswim. No, it's the third, okay, but it did take out Microsoft and took out Apple for a minute there. But that doesn't matter, okay? It doesn't matter. It's still the most important stock. Why? Because I can simply just go into the trade tab and I could look at implied volatility, right? So you look at Nvidia, nothing's changed. This has been the same thing. So you can go out, I don't know, go out till July 26, right? Go out to August. It doesn't matter. Look, you have about a 57% vol, okay? That's July 26. Go to Apple, right? Do the same thing. 22% vol. Microsoft. 23% vol. Okay? So Nvidia is the most important stock in the market. If this thing gets hit, it's going to hold back the Qs. It's going to hold back the markets. This is just because. It is what it is. Okay? So that's kind of the realm of everything. So is this just, getting hit, right? We had this bearish engulfing candle over here, and it, went back up and came to the downside. We did the same thing right here, bearish engulfing candle. It came back down. But this is all to be expected stuff. Now, there'll be a time, I don't know if it's this time or not, where people will try to buy the dip, and it'll keep dipping, and then they'll add to their positions, and they'll keep dipping, and they'll add to the positions, and eventually it'll flush people out, and then all of a sudden it'll rip right back up, because that's what happens when you try to, buy every dip, right? Eventually you get caught up in a trap. So when I pull up the 15-minute time frame, so this is just quick thing. It's to hold yourself from doing that. What you can do if you are buying the dips, you can look at expected moves, right? So for example, Nvidia, and by the way, we'll get into the markets and all that stuff here momentarily, but for Nvidia, right, it's down what? It's down 5% for the day, give or take a little bit. The lower expected move, weekly expected move, is 118.52. So 118.52 is right here, give or take a cent. Okay, so what's going on today? Look at where the market pulled right into. Its lower weekly expected move, literally, and started bouncing from this area. Now, if you are looking to buy the dips sometimes, and if you think the market's going to rip back up, okay, well, then you could target into these to do starter positions at lower weekly expected moves, or when the RSI is burnt to a crisp, if you're looking to buy these dips. If you want to be more patient and more tactical, you wait until price recovers the 5-day moving average, right? Because when you're down here, when you're below the 5-day moving average, it's bearish, but because it's flat to going up still, it's bearish with caution, right? Because you can snap right back. It's much more bearish if it starts trending down and you start following that trend down, okay? So the proper way to do it, if you don't want to sit there and bite your fingernails, is to do small positions on dips and or wait for price to recoup, build a base, and do it, when the trend is back, when the wind is at your back, so to speak, right? When the wind is at your back, it makes things a lot easier to trade. And if you're going up against, if you're doing counter trend type of moves, which I'm a fan of counter trend moves, I do counter trend trades, right? I do that stuff, but it's when I approach a counter trend bet, for example, SoFi, right? So SoFi was one that I entered, and this was in, if you're in the Discord, it was one of the trade thingies, and the smell of the sea is at your nostrils. What? I missed something. So SoFi, right? This is a counter trend bet. Why counter trend? Because the 200's down, the 50 days down, the 20 days down. I don't care where price is relative to it. I just know that these averages, they're stacked upon each other. The 200 above the 50, above the 20, they're all pointing down. The trend is down in SoFi. So why would I go long? Why would I go long when it was down here, right, below a declining 5-day moving average? The only reason is because I can take a small position and playing against a little trend line over here that we've seen some strong moves from. So does that mean I'm going to hold it up to here? Probably not. I'll probably scale some out already. It's already up 2%, but you can catch little bounces like that here and there, okay? Let's talk about another one that's been beaten down, Snow. All right, Snow looked like it was building a great base here, okay? And then it gapped up on earnings and everyone's like, oh, it's going for it. And then it reversed itself. And this happens, right? It doesn't make anybody stupid. These things happen in the market. It looks great, then it doesn't look great. And you got to just manage your risk as time goes. As we frequently say, that's if you want to be successful in the markets, you got to get very good at just risk managing, right? What is going on here? Okay. Remember, right? If you take a bunch of trades, right? If you take 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, and you're like these, the small ones were winners, right? These little guys were winners. Bing bong, bing bang, boom, boom. But yet you had, this was your loser, and this was your loser over here, and maybe this was a winner too. Okay. If you were to just be able to minimize the losses on these things so they weren't this big of losses, it's going to make a big difference to your P&L. Okay, so you got to manage risk. So just keep that in your mind while we're going through today's stream. Okay, when I look at Snow, take a look here, right? Counter trend move potentially, setting up. Why? Well, because price action is getting very tight here. It's been on a sell-off. So now, right, prices move between expansion and then contracting, so it's getting very tight. So let's go into the 15-minute time frame. What do we notice happening? The 5-day moving average, it's starting to flatten out. It's starting to. Okay, so what does that mean? It means that if price can get back above it, right, it's the best time to pretty much trade would be when we start to see the 5-day moving flatten out to turning back up and trying to catch the early trend move for a potential larger trend change. Okay? But there's also, it's not just that. You also have to look at higher highs, higher lows, lower highs, lower lows, and so forth. And you'll notice here you have a high, a lower high, a lower high. You have a low, you have a higher low, and price is just coiling up right here. So is it actionable right now? If you go actionable right now, where's your stop? Well, your stop should be right here, or your stop should be right over here. And then if you get stopped out, whatever, if it turns right back up, okay, look to re-enter if it starts to set back up again. But personally, for me, on stuff like this, yeah, I look to see things kind of coil up and move and start getting above these little pockets over here. Okay. Let's take a quick look at the market here. So the big thing going on right now, and the key word that everyone's going to be hopping on, right? So we've talked about bifurcation in the markets, how small cap stocks and all these names. If you watched the prior video, we were talking about how things were getting oversold, and they could get oversold very quickly if the market were to pull. But now we're in an environment where you can have all the stocks up in the S&P 100 and maybe 1 or 2 down, and then and the markets could still be down. That's what's crazy, and that's what we're seeing right now. Rotation, right? So you're seeing a rotation into names that have been getting pretty much beat down, not all of them, okay? And we're seeing a few names get hit. The few name really being Nvidia, which is the larger name, right? That's the one that really holds this market. So if we go to the heat map, let's take a look here. I mean, look at all this green on my screen. There's so much green on my screen. You have Google that's relatively flat on the day. Microsoft slightly down, right? Okay, and Google is down. Goog is up a little bit. A little weirdness there. Amazon's pretty much flat. But let's take a look here at those names specifically. Why this doesn't look all too bad. All right, Google. Look at it. It just had a breakout, right? This was on our tight list last week. Probably still is. Right, we this little tight pattern over here, right? Price got attacked. Boom, we broke out. Okay, now we're pulling in a little bit here. Okay, solid breakout, good volume. I mean, the volume is there because it was OPEX, so a lot of these names are going to have higher volume. Okay, let's look at Amazon. Amazon's pretty much at pretty much at highs, right? So this also, right? Higher lows, building into a pivot area. Right, strong stocks typically get stronger. So if you're long, where do you get out? Well, maybe under here, or maybe under here. Depends on your sizing of your position and so forth. So all these names here look good. Okay, so you pull back Nvidia, it's coming off. Oh my gosh, and it's already tagged its lower weekly expected move. Okay, pretty normal stuff. Okay, boom, we're right at the lower weekly. It doesn't mean we can't break through it. Okay. But we're at the lower weekly expected move. That was expected for the week on day 1, not even a full trading day, just an hour and a half. We're already down there, and the RSI's burnt to a crisp here. Okay, let me have a sip of my coffee. That's good. That's some tasty goodness. Don't chase hard-ons. You got to be talking about Nvidia, yeah, for sure. Can I look at Amazon, Tesla, FSLR? Yeah. I'm going to be hitting a lot of these ones. Yeah, if you guys want to, guys or gals, whoever's in the chat, you can type in some names and I'll make a list of some names too, okay? I don't see the chat for Twitter. If you're out on Twitter sphere, I don't see that. Maybe I think you got to be on like a desktop to do that, or maybe mobile. I don't really remember, but let me see here. Am I even streaming on X right now? I am streaming on X right now. Got 300 people there. Yeah, no chat. I think you got to be on desktop for that one. But if you're over on Twitter and you want to come to YouTube, you can come over to YouTube and I'll see your chats there if you want to pull up specific stocks. Yeah, because not one single chat is in Twitter. It's very weird. I find that so weird. They got to do something about that to make it easier for people to chat. Okay. TME. Chris Johnson with the TME. Chris. I like your style. I was looking at that one myself. Okay. So that's kind of the take on the markets here. Let's take a look just really at the structure for the day. The reason why I didn't get into it right away is because, well, the markets really haven't gone anywhere, right? Since the opening, right? So this is the 30-second opening range for NQ. We opened right here. This was the high. That was the low. This is the midpoint. Where are we? We're right there. Right? We saw a little bit of flush. We came right back in. Okay, not much movement today. If we take a look at the S&P 500 and we look at some of these zero-date levels for the trading session, I'm going to give you a couple of key levels to really watch for, okay? First and foremost, right? We're right at about the 5-day moving average. It's still trending up, so things are still in bullish context. If it starts breaking below, but it's still trending up, it's bearish, but it's with caution because you can still get these rippers right to the upside, okay? Where are we in terms of the monthly expected move? It's June 24th, have a little bit left time in the month, right? We're just above the monthly expected move, right? We got outside of it, we came back in, we're moving back up, and we're still above that rising 5-day moving average. While we're above the rising 5-day moving average, we're also above the gamma flip line, okay? When you're above the flip line is incredibly important. People that, if you don't use gamma levels to just get a quick understanding, if you're trading intraday, this is the hack to get into significantly better, is to understand where dealers are positioned and how hedging activity takes place when we break these key levels, because it makes a huge difference in your strategy. Because you might pick a strategy and it might work for a little bit and all of a sudden it stops working. You're like, what's going on? And then you try to look for a new strategy. Well, typically, if you're consistent on it and you're not aware when the market conditions change, because market conditions can always change, and all of a sudden your strategy is not working in that specific market condition, knowing that information, you were able to take that information and be like, hey, when the market conditions change, I can just adjust my sizing, or I can lay off trading XYZ or however you trade. So the gamma flip line, this will tell you how dealers are going to start. In short, how I like to explain it in very simple terms, this tells me when we're above it or below it how the market conditions are going to be, but I add in another element of the 5-day moving average. So when we're above it, right, this is when volatility compresses, right? So volatility comes down where dealers look to sell the rips and buy the dips. Sell the rips and buy the dips. Okay, in this environment, liquidity increases, volatility decreases. Now, there was a note by Goldman Sachs today that the buyback window is out. So that's something to make note of, but we are still in a positive gamma territory. So if we break the gamma flip line and we start getting below it, this is where instead of selling the rip and buying the dip, selling the rip and buying the dip, where volatility decreases and liquidity increases, when you're below it, this is where the dealers will sell into selling. And on the flip side, buy into buying. Now, the line is never perfect, right? It's always different with different services. So it's always kind of a zone. So be aware of that. However they aggregate their data, whatever their model is that they use. But it gives us an idea of when we're in the realm of a changing market environment. Okay? Now, why is it important when we're below it? When we're below it, from what I've noticed personally, so I'm a swing trader mainly, right? So I swing trade. I look at a lot of the daily time frames and 15-minute time frames. It's kind of my specialty. That's what I'm good at. That's what I've always kind of magnetized to or gravitated towards. When we're below the flip line and we're below declining 5-day moving average, and I know that volatility is going to increase because liquidity is decreasing, right? They start to hedge in the direction of wherever the market goes. They sell into selling, they buy into buying, and it gets wild and crazy. I've seen too many times where my breakout trades, they fake out. They fail. I get breakouts and then they whip right back down. And that is something to be aware of, because when we're in a changing environment, that's where I typically look to trade differently. But as it stands right now in this current moment, we're above the flip line. We're above a rising 5-day. We're at the 5-day moving average, above it slightly. And that's just what it is, okay? So that's the SPY. That's the S&P 500. That's the market conditions. We have that rotation. Look at IWM, okay? IWM hasn't gone anywhere for all year, okay? We're starting to see a little bit of a move today, but we saw a little bit of a move last month, and a little bit of move the month before, and a little bit of move this month, and a little bit of move over there. So really, we're just in a sideways choppy range. We're above a rising 200-day. The 50-day moving average is flat to neutral, so there is really no trend here. But the larger trend beneath us kind of is that like undercurrent, right? It's the undercurrent, that's the strength. The larger trend, which would technically, in theory, be bullish, okay? And then the small trend's slightly down. Now, this 201 area has been pretty interesting. The last time I was live, I think we talked about specifically on this day and how I was looking to play into and around this range. I didn't hold it all the way up to here, but I figured that would be the level where we can get some, resistance of some sort, given the context of looking back at this chart where you see it multiple times where it kind of broke down from it or ripped from it. Even go back a little bit further, you had this area of resistance here, and now we're kind of getting above it as well. Okay, and now we're currently getting above it, but we had it, and then we came down, and then we're right back up. Look at the 5-day moving average. It's actually still down, but look at how it kind of just held the 5-day moving average here. Got very tight, and now we're starting to break above it. So now, my question is now the time where we're going to start to change this trend? Would I go along here? No, I probably wouldn't go along right there. But what I would look for now is a higher low. So if it goes up, if it comes down, if the higher low is right here, I would look for the strength to come from that. And then I try to enter in either on a consolidation early before this break or wait for the break. All right. So that's what I would look at for IWM. The IWM right now, it's been grinding up higher. It's kind of just in a sideways range, neutral. Could it be the start of a bigger move? Yeah, perhaps. That would be great if that was the case. But now I just want to see how it digests today's move. Okay, now the weekly expected move for IWM, the upper weekly expected move is 204.16. All right, so 204.16 is right in here. All right, right about here. Give or take a cent. Boom. Okay. Right here. Okay, there it is. So we're almost at that. So, would it be shocking to hit this week? Probably no. Would it be shocking to go above it? Probably not, actually. Okay, but that's where we currently stand as far as the upper weekly expected move goes. Dow Jones making a little bit of a comeback here too. This is what I mean by that whole kind of rotation stuff. Okay, a lot of sideways price action. You can potentially call that like a little tiny double bottom, maybe. And now we're seeing a little bit of break from that. All right, we're going to go into some other names here too. Apple recovering from today's move. Apple looks pretty good. It's really just kind of consolidating. Let me fix this. If you go long Apple, which kind of creates, today's, I would say, is kind of an opportunity for Apple, in my opinion. You just have a stop at the low of the day. If it plays it up back to 220, that's always a possibility. But you would do it with tight stops. Okay. Give me a second here. Coffee break. How do I come up with the gamma flip line? I source the data from Gamma Labs. But what they basically do is they look at all the positive gamma, right? Or they look at, let me show you. Let me show you the distribution of it. Here's a positive, okay. So they basically take all the positive gamma, negative gamma, they run it through their model, they come up with the gamma flip line. This is net gamma. Okay, and then you could look at also 0-day gamma for the day. And this gives us an idea of range for the day. Sometimes it just gives us a random level. So, you know, it sometimes works great. Sometimes it kind of just gives us some ideas where traders are focused for the day. The range right now is 5465 to about 5500. So I drew that out this morning, right? So we're right there, 5500, 5490. That was another 0-day, and then down here, right? So the 0 DTE levels, that was, you know, I pulled that at 5:30 in the morning today. And we're basically pulling into that area, that 5500 level. Okay, not too far off of it. As far as net gamma goes, the main call wall is back to 5500, but I will say traders are reaching still up to 5600. That's still a thing here. Now, I don't have the volatility chart on hand, but I will note that I do find it very interesting today that looking at the S&P 500. So let's go to the chart of the S&P 500. We got a weekly expected move up here at 551, a lower weekly expected move of 538, which gives us a total of expected risk of about $6.50. That to me is actually, I would 100% think that we're going to be tagging one of these. Okay, I have a very high probability that we're going to tag the upper right here and or the lower down here this week. Okay, and some probably, like I feel like and some most likely. Why? Because we have a lot of different catalysts. On Thursday, I believe is, correct me if I'm wrong here, but I'm pretty positive it's first presidential debates. Okay, that's Thursday. And then if you look at the economic calendar, we got some decent stuff. We got a lot of Fed speak, like always. We get some GDP numbers on Thursday, durable goods. Friday, we get core PCE, personal income, personal spending. So there's quite a bit of data coming out. Today, we just had a 3-month bill auction, 6-month bill auction. I think that's pretty much going on now. Is my trade the news active? Yeah, they just came in. Did I not get notified? Let me test this.
If the audio is not broadcast quality, is not clear, or is choppy.
You're listening to Trade the News.
Okay, it's on. I'm probably going to get rid of Trade the News. It's a good service, but it's kind of just expensive for what and I just don't really use it too frequently. A few days a week. I don't know if it's, I don't know. Maybe I can switch up the subscription or something like that because I had the big one. All right, where was I? Yeah, okay, so we have the, sorry, we're talking about like events, right? Events. Yeah, a lot of different, so the reason why I brought that up is because we have a lot of different macro events coming out. And then we have also the elections and stuff like that. And I think that, let me see if I can pull up the volatility chart just so you can see it. Which one was it? Is it 3 month versus 1 month? I don't think it was that one. 1 month versus IV. No, it's not that one. I can't recall which one it was. I'll have to pull it up a different time. But basically, in short, the volatility structure was pricing in some higher implied volatility later in the week. So, I mean, easy way to check that is actually just going into the SPY, going into the trade tab, and you can see right here on the daily basis where, you know, price kind of goes to on the expected moves. But still, nonetheless, I feel like that's a pretty low expected move given the context of how much we have coming out this week. So that's the reason why I say I think it's very probable to hit one of these expected moves, lower or upper, on any of this data that comes out. So just be ready for that. Moonraker. I mean, it is the news. The Trade the News actually is great service, and I do like it. And a few of their alerts really did get me in front of a couple of names twice to cover the service. But I just don't think that I use it quite enough for its cost, which it's about $500 a month, right? So it's not cheap. Like $500 a month, it's like, eh. Like at that point, it's like I start thinking of things like what else I can use that money for, and it's like I could use that for like a private school for my child. It's like I just start doing the ways like, okay, where can I get better value from? I don't know, or even like groceries or something like that. That's kind of how I start thinking about it. But if I haven't fully decided. And there's other news services too that I can probably get for probably less than $470 or $480 or $500 or whatever it is per month. Okay, yeah, let's put some tickers in the stock chat, and then we'll pull up some of these individual names. I'll go through some of the names that I'm looking at. I do plan on adding some more exposure. I'll cover Tesla first because, by the way, everybody, SPY is getting pretty tight right here. SPY is not only is it above a rising 5-day moving average, but it's getting pretty tight right here. All right, so break, come to 547, 548, fill this gap. It kind of already did. Come back up to the daily expected move. I mean, it looks good so far, right? It's holding up rather well. Okay, and this is also on the back of we already, like I said, we already talked about Nvidia being down there, and it already tagged its lower weekly expected move today. Okay, so you might be like, well, what if I don't want exposure to Nvidia? What if I want to do semiconductors and not have that much capital? Okay, cool. Take a look at SOXL, right? SOXL is a leveraged fund. You have a positive divergence there. It's pulling in a little bit, right, into the 20-day moving average. Is pretty aggressive move from 66.19. Is this the top? Is it game over? Is it straight down? Maybe, but I mean, also if you're long, you can also just have a stop at the low of the day, or start a small position, and then next week try to get back in at the lower expected move if it continues down, and you build out a position, right? There's so many different ways to approach it. The worst way to approach it is go and just put a full-size position in blindly right away, and then start biting your fingernails if it doesn't go in your favor right away. That's probably the worst thing you can do. It could be the worst thing, it could be the greatest thing. But unfortunately, if you do that consistently over time, you will run into problems, because anybody's going to run into problems trading. So whatever you choose, you got to be consistent with it. You can also look at other various names, tickers. So AMD is looking pretty decent here. So is this coiling up for a potential move higher? I think that I was looking at it as just like a sideways box here or whatever, just like a little Darvis box or whatever you want to call it, consolidation. Now it kind of looks like it's wedging. Now we have 3 days pretty tight so far, right? So this day, is a pretty large breakout day with some good volume. The following day was an inside trading bar. And now today we have another inside trading bar. So AMD is getting ready for a move. And how you play this would be simple, right? You play the breakout of the high of this day, where you just get in now or whatever, and then you have a stop right here. And if you get stopped down, it comes back in. You could look to reset up, and so forth. But that's kind of how I'm looking at AMD as it stands in this current moment. I do not have a position. I do have a little position in Tesla. So Tesla, man, I just think Tesla we're at this very interesting area with Tesla. And Tesla just, man, it can't get out of its own way, unfortunately. Let me update the expected move here for you all. This is what the market priced in this week for Tesla. 191.68 is the upper. Okay, so here, now the last couple of weeks, we've been going to the upper expected move, and then we've been selling off. We go up to it and we kind of come off. Like right here was the expected move, and then the next week was like, okay, and now we're not too far from it. So to come back up here, I mean, that to me kind of makes sense. The lower expected move, what is this one? What is the lower expected move? 174.34, okay. I just got a good memory, don't worry about it. Don't question it, I'm just kidding. Question it. But what I do like about Tesla here is we've had pockets of decent volume in Tesla. Okay, so not only do we see, earnings, it moved up, right? Then we gapped up again on some news of some sort, right? Big volume. Then we came in, all right, I even traded right here through this breakout. Boom, I was like, yoo-hoo, caught it. And then it reversed and it stopped me out because I thought that we're gonna have continuation. I just held into it. And I got stopped out for, I don't know if it was break even or a small loss. Doesn't really matter. It was basically pointless. Okay. Got stopped out, and then I'm waiting. I'm still looking at this. It's like, the 50-day is still flattening out to going up now. The 20-day is still moving up. And then we get all of a sudden, boom, another day with some good volume. Oh, and then it comes in hard. Oh yeah, go figure, it's Tesla. And then boom, another day with some good volume again. And then we have a couple of days just coming in, consolidating within this big bar. I'm like, okay. So it seems to me like it could be setting up. Now, what is the important person? And there's, by the way, there's S&P 500 still making this kind of little run. The level, let's go to the daily time frame. I'm gonna pull up Tesla, right? Take a look. Let me move that purple line. The purple line is irrelevant. Okay, so this is kind of how I'm looking at this trade exactly, like structured. It's, okay, this red line here, this is where the year started out, and this is known as, that's Moonraker. That's a good point. Jalen, thanks for those names. We'll pull those up. Year to date, anchored. Oh my God, it's almost easy just to say the TWAP, right? Time weighted average price. Because that's technically what it is. A TWAP, time weighted average price. You basically anchor it to a time. Okay, so it goes in, you sell off, boom. It came into the year to date right here too as well, right? Boom, it held as resistance. Boom, it came above it. We're excited. Boom, resistance. Boom, it came up. Boom, resistance. Now, the more times you test it, it's just like support and resistance. The more times you test something, the more likely it is to eventually break, right? So we've tested it multiple times, but to note, where did price come from to test it from here? It's actually consolidating, right? So here, it was a straight move into it, okay? So are you going to play a breakout right here on a straight move up? No, you wait to see how it consolidates and digests. And this time it digested and it came in, right? And then it went forward again, and then it came back in, and then it came forward again. And now it's actually basically trading right here, right now, there. Does that mean it's going to break out? Absolutely not. And if you think it is, and you believe it is, and you're wrong, and you hold it, it can be quite devastating of a downturn, right? We've seen this stock move down and get crushed. Okay, so you got to still manage, obviously, very well your risk. But if it does break out, perhaps that opens the door for, the sentiment of this stock to change. Why the sentiment? Is because it's telling us that the average buyer for the entire year here has basically been underwater, and then all of a sudden the average buyer, based off of that time, starts to get into the green. They start to get
to support production of low carbon hydrogen and low carbon ammonia at their Baytown, Texas facility.
They start to get a little bit more optimistic. Right, so then
the ERA in France saying that the NBSF deciding against the joint.
If you all of a sudden you have all the average buyers since the start of the year, all of a sudden are much more optimistic, and then all of a sudden people start more talking about it. I just think how that works, and then all of a sudden you get breakout traders, right? You get traders that actually look to play a move outside of these tight consolidations. Okay, then you have that. Then on top of that, you have people that are short the name, and it starts breaking from the year-to-date anchored VWAP, and they're like, yeah, it gets really tight and starts moving up fast on them. They turn into buyers too, because they have to cover. So you can have aggressive moves out of these tight consolidations, especially when you start looking at stuff like this year-to-date anchored VWAP and so forth. So yeah, I like this trade setup here in Tesla. Do I think it's going to break out? No. Am I positioned for a breakout? Yes. So my conviction is not high, but I'll be part of it if it breaks out. And if it breaks down, I'm out, right? There's not much to it. Okay, let's pull up some of these names. I got to write them down. Sorry, I keep on kind of going everywhere. Okay, have I tried Benzinga? I did trial it, and I know that one's actually a little bit more inexpensive. Well, I think it is. I can't really remember, but I'll pull back up Benzinga because I like Trade the News a little bit more, but their platform was a little bit more confusing. And then Benzinga's was very clean looking, but it wasn't as intuitive as Trade the News. And it didn't feel as quick. But then again, I only tried it for 6 days, right? So I don't really know. Okay, here we go. SoFi. Okay, I'm just writing these down. We got SoFi. Also, to call out. I do have the book map up, but we don't need to look at that right now. So we're right there at about 5,500 people. That's a 0-date level. Let's take a look at market net flow. Yeah, market net flow has given us the suggestion of pretty much chop for the day. We're below the 0 line here, okay? No divergence between cumulative net premiums of calls and puts, back and forth between, you know, red convergence, green convergence. This is basically a crud show right here. I don't read too much into that when it looks like this, okay? Not a real strong edge here, in my opinion, looking at market net flow, okay? That's why we're just now talking about it. What's going on in France? Good question. I don't know. What is going on in France right now? Like the ETF? Like the France ETF, or like news stuff going on? Oh, did something happen? I probably have heard it, but my attention span is of that of a goldfish. No, not a goldfish. Yes, of that of a goldfish. Hey, what's up, FT? Okay, so SoFi, Nike, PayPal. Okay, all good. Then it's T-Pain. T-Wop to T-Pain. Okay. I'm just looking at some of these ticker names. Keep them coming. I've got SMCI up in there. Up in there. I don't know if private school is $500 a month or not. But one of these ones that we look at is like, I think it's around there actually. Connected to our church, so that's probably why. Because I think private schools can get a lot more expensive, obviously. Maybe it was more. I can't recall. I haven't really looked into that stuff yet. But right now I'm paying that for a news service. So Meta, gotcha. Yeah, Meta. Oh, nobody mentioned PANW, dude. Why did nobody mention PANW? Let's look at that right now. So PANW showed up on my radar on the tight list. And you can see here, it is getting fairly tight. It actually went for a little bit of a breakout today. It looks like it kind of sat back down. So it was like, yeah, no. But it is still above that 5-day moving average. We're pulling in a little bit, right? It got a little frothy. Now it's coming in there. So PANW might be a trade here. But you have, a nice run up. You have higher lows. So a breakout may, like we were talking about this, I think really pretty much the last time we were talking about was this little trend here. And it broke out, it kind of went higher. Now we're getting coiled up. This is why you missed this, okay, fine. Well, now it comes back in, came all the way back in, consolidated again. Hey, who knows, man? If semis want to keep on going, boom, we can maybe go fill that gap with around 360. That would be a huge trade right there. It'd be a really big trade. That's like a 14 to 15% move just to fill the gap. Is it going to do it? I don't know, but the trend is up. The 200's up, the 50 days up, the 20 days up. You have decent risk being built right here, right? Like you know where to get out. You know where to get in, right? There's your risk and there's your reward, potential reward. Okay. Did I say public or did I say private? I meant private school. That's what I meant. What did I say? Did I say a $500 per month public school? I think you know what I meant if I said public. I meant private school. We're looking at it. I don't know. There are some really good public schools in where I live, and I'm familiar with them because we grew up with them in this area. It's kind of country out here where I'm at. It's not quite Sacramento. I just say Sacramento. Them country folks don't mess around. Okay. IonQ. We're going to be pulling up some more of these names. Yeah, software making a pop. Okay, cool. I did say private. Okay. AMGN. We got the Meta. What's up, Kazi? Hi. Yeah, DJT. Is that what is the social media name or something like that? Hey, good morning, Loves That Match. The name of the indicator, Herman. I don't know which indicator you were talking about exactly, but I don't really use too many indicators. I have a couple moving averages, if you consider those indicators, and then I look at gamma lines, which I don't even consider those, indicators. AVGO. I'm just going here. So, and then TME was one that Chris mentioned a while ago. So pull that up. Snow, we did talk about already. I can go back into that. And then we have Amazon, Tesla, Fassler. Yeah, Tesla, we kind of did. SQ, we'll do Square, BAC, Bank of America. Bank of America. For someone new to day trading or swing trading, would you recommend what would you recommend for them to learn first? Okay, so between the two, I think it's an easier fit to learn swing trading. Not necessarily quote unquote easier, but I think that day trading could be a little bit too fast paced right out of the gate, where swing trading could really let you to learn. I mean, it's all fractal, right? You can look at daily candlestick charts, you can look at a minute candlestick chart, and they do the same things, but more fast, more aggressive, and so forth. So swing trading is kind of where that's just kind of more of a bias for me. MOS, we'll pull up MOS, cool. SMCI is getting hit right there. I'll pull up SMCI, yeah. 5K a month for a private school? No, dude, no way. Maybe in like the top of the line. That's crazy, really? Is that really what I'm walking into? Yeah, I'm not gonna be doing that. That's all good. That's more than my mortgage and taxes. Mortgage and tax of my home. That's like 60 grand a year. I guess that wait, was 5K a month is, yeah, like 60 grand a year, right? Yeah, I guess that actually kind of does make sense. There are definitely private schools that charge that much, huh? Okay, so I said, where do you start first? First, I would probably look into like how to read a chart, right? So if you're getting into it, right? I think one of the most important things when you're first starting out is to learn how to read a chart, because it's not that technical analysis predicts, but it helps you manage risk. It helps you you can forecast price trends, right? Okay, cool. But you can also, when you really understand the basic principles of technical analysis, God, I should just record my stuff. I have an entire deck that I built out, and I still haven't recorded over on it, and I even really launched it out. But it walks through the principles and kind of just how to, stack ideals in your favor and so forth. But yeah, how to read a chart, the basics of reading a chart, understanding the basics like, volume and so forth, bid-ask spreads, the basic, the simplistic stuff. Start, and then that's your foundation, your framework, and then you kind of go from there. You can do it through book form, through course form, or you can go, all willy-nilly and go by yourself and try to figure it out. But the unfortunate thing is all the information's online for free. Let's be real. Okay. You can get any information that you want basically for free online. The problem here though, is you don't really necessarily know where to start, and there's no framework for you. And that's where kind of sometimes courses come in, is you can have this like a framework built for you. I guess if I was to recommend one book, and it's not about technical analysis, but it does help you kind of read charts. It's a little bit about technical analysis, but it'd probably be, damn, what's the book called? I have it. Give me a sec. Forget the name of it. My bad. I'll have to look it up. I'll pull it from my shelf. It's a great book. It's very simple. Everyone's heard of the book. But okay, we're gonna pull up some of these names, and then I'll try to remember that. Okay. Yeah, and there's some courses you can probably get online for free too. I mean, you just said Thinkorswim has one. I'll post the link in. So give me a second here. YouTube. My channel. All right, we're gonna get into these names. Like I said, I want to see what SMC. Somebody was saying SMCI was getting clapped right now. Yeah, it kind of is. Okay. I'm gonna post. I'll post the little pinned comment there. So I've been partners with these guys for like years. Interactive Brokers, and they have from basic courses. So let me see if I can pull this up. I don't know how to do this. Oh my gosh. Trading in the Zone is a great book. Yeah, that's classic. Yeah. Let me pin this. Gosh, how did it always these emojis block my thing? Somebody say something in the chat so I can pin my dang comment in the YouTube chat. So I can't pin it. Okay, basically that link takes you to just the Interactive Broker website. But if you click it, let me see if I click it. There, you scroll down a little bit, and it says "I view IBKR campus," and it looks like this. All right. Make sure my Interactive Brokers account's not up. It looks like this, and then they have courses right here. I'm sorry, It looks like this when you pull up the link, and then you scroll down a little bit, and it says View Interactive Brokers Campus. When you click that, it'll look like this, and then you have some like courses stuff, like stocks, options, future. I mean, it has so many things. But then you do webinars. They have, they legit have some great resources and stuff, which is pretty cool. Okay, so there, maybe that can help. And then there's Thinkorswim. Anybody that else might have some recommendations, they can throw that in the chat too. Okay. Okay, there, now I can pin it. Yeah, because somebody said something. Thank you, I appreciate that. I wasn't, like, the emojis, like, block it, and I can't, like, pin my message. Okay, I don't know what's going on. All right, we're trading right around that 5,500 there. So SPY, right, we talked about SPY, how it was kind of coiling up. Let's take a quick gander over there at the 15-minute time frame, see if we made that little move. There you go. It's still kind of coiling up, really. All right, put that 130-day moving average back up, okay? And it looks like it's gearing up to pop right back up, right? Would I short here? Absolutely not. Would I look to go long? Yeah, probably. And then just have a stop, you know, there, here, so forth. It's still holding rather strong. Okay. Unless if something hits the tape. Okay. And then if Nvidia starts turning around too, oh my goodness, this thing could really start ripping. So Nvidia, it's moving a little bit from that lower weekly expected move there. Okay. Daily time frame. We're gonna pull up these names. Keep on putting it aside. All right. So SoFi, I talked about this one a little bit earlier. I'll re-tag on this one. Like I said, I have a position. It's a counter trend bet. So this means that I'm in and out probably pretty quickly. All right, so yeah, we came into this lower trend line, saw a little bit of a hammer candle. I looked at this as a potential opportunity after a strong sell-off for a counter trend bet. We're getting some follow through today. Do I have high conviction that we're gonna go back up here and come to the upper part of this channel? No, I don't really have a high conviction at all. It's a poor trend, but maybe a bounce right back up into here. Cool. What I'll do is if it keeps going up, I'll probably take a little bit off and I'll just update my stop loss to the low of the day, right? So I'll see how the close goes. I mean, we can reverse itself completely today for all we know, right? But what I do like here in this structure on the 15-minute time frame is look at the 5-day moving average. It's kind of curling over, okay? So this is positive to see this. Now it's bullish, but with caution given the context, right? It's flattening out, not for long. It hasn't been flat for long. It just started flattening out today, right here, okay? But it is kind of flagging out, right? We saw this bottom, we saw a higher low, we saw a nice little break today. It's kind of consolidating. So what I'd like to see is maybe, even if it comes in a little bit, I'm okay with that. 5-day moving average starts to flatten out, then it starts to move and starts to break this high. You know, work off some of the oversold condition there, a smaller time frame. And then I would just update my stop, right, to the low of the day. And then follow through. And if we get follow through, great, and I'll update it again to the low of the day. So SoFi, it looks like it's good for a bounce, but just be aware. Be aware. It's all about stacking ideals in your favor, right? You have the bulls, right? Then you got the bears, right? The BE. I'll just put BE, okay? And what do we have in the bears' favor? Well, you have trend in your favor. What else is in the bear favor? Well, also the recent price action is actually in the bears' favor because it's been straight down, all right? So what's in the bulls' favor? Oh, price action was at a trend line. That's pretty much it, all right? Then you can go into fundamentals and you can try to stack as much as you want. But when I'm just looking at this chart, it's like, yeah, I mean, it was a strong move in there, and that's basically it, right? So there's more favors. Now, if I was thinking about this in terms of, hey, but would it be a good short here? And I'd be like, oh, there's a lot of ideals in the bear's favor. Okay, yeah, but where did price come from to get to that decision to make me short or want to short or whatever the case is? And I would say, well, it came from up here to down here in a very quick form. So I'd be like, yeah, no, I'm not going to short there. When would I short? Oh, maybe if it comes back up and consolidates and then starts breaking back down, okay, then maybe. I don't really like shorting. And my position sizing is way different when I short versus when I go long, but hopefully that makes some sense. And typically when I short, I like to use more ETF style. You know, I'm not really an individual stock name shorter. I usually hop into like something like SOXS, you know. That was a recent short of mine, a small one, and I'm already out. Yeah, but see, so Joe's saying some stuff about SoFi taking out these higher levels. He might be right. You know, ain't nothing right. I mean, it could be 100% right. I personally, I don't know. I have no idea, right? I really don't know. A lot of people can be like, well, look at the fundamentals of the company. It's mispriced. Maybe. I'll tell you another company that's mispriced. DIY. I think this company is super underpriced, mispriced. Okay? This is the Uber in China. Like, so first off, I tried trading this multiple times and got stopped out, basically break even. Finally, I caught it moving through $4 and I was out at like a 20% gain. And I'm like, oh, now it's pulling back. Now I'm going to wait. And they kept on dropping. I'm like, okay. Like, and then it broke this trend right here. And now I'm looking at it again now where it's what it's doing. It broke the trend. I'm like, ooh, okay, maybe it's setting up here. And I didn't enter. Now looking at it, I mean, it's actually coiling up here. So if I did go long, I'd still have a tight stop, but these China names, man, you can wake up and they're down a lot and then they'll be up the next day and it makes it difficult. But I do think that this is a name that will probably end up getting, I think it's a name that'll end up getting probably relisted, not on the OTC. I think that's the problem here is it's in the OTC market after like all that stuff went down. I mean, do you remember what happened to like Luckin Coffee? What is that? LUCKY? What is Luckin Coffee again? I forget. But that thing went to like $2, $3. I got locked in a position there because they halted it for like a month or something crazy. And then all of a sudden I got my access back and I got out, but I wish I was still in it. That thing went to like $40 or something. I don't know where it's at right now, but okay. So there was SoFi. Let's look at Nike. Nike's going into earnings, so just be aware of that. I'm kind of liking the setup in Nike. I'm feeling pretty good about Nike, but I just prefer to see their earnings before just getting like in right now. So June 27th, it is a few days out. If we go to the trade tab, we can look at the implied volatility. It's about 88%, which equates to a $7.38 move. So we'll get, as time progresses closer to this, you have to re-pull it up. LKNCY. Thanks, Marcus. LKNCY. Yeah, I'll pull that up. But we're getting closer to the earnings date. So implied volatility obviously swells up like a pufferfish. It could be up, it could be down. I have no idea. When I looked at the weekly time frame, I mean, it's not great looking, right? But we are starting to see a little tiny change in trend here on the 10-week. And what you'll also notice here too, as price was kind of making a matching bottom, you had the weekly MACD kind of showing a little bit more strength with a bullish crossover. So yeah, the little technical stuff is starting to change, but we did break down from this and it came back to us. It's still holding as resistance. We still have some declining larger time frames. So the trend is down. The trend is down. So if earnings comes out and it's like, let's go. All right, let's go. And it's a big green bar, then it's on my radar. And then it might follow through more, or it might come in a little bit and consolidate, flag out. And I call that a power, everyone calls it a power earnings move or power earnings gap. You know, big strong move, volume dries up, the price action digests, and then I look for it to set up a low risk entry to trade it more to the upside. Because I mean, we could be up here, right? We could be at 122 by the end of this year. If it's a bullish move, if we get a bullish move, boom. And then all of a sudden, and earnings come out and then it consolidates, boom, we could go flat, we can move, okay? That could be the case. I like Foot Locker. I didn't trade Foot Locker, and unfortunately, I can't enter in right now. I missed it. Bummer. But this is one that's been on the radar. We talked about multiple times. It was consolidating. I think we talked about it here, and it just kept on getting tighter, and there's the breakout, right? The 20-day is starting to spread there. To be honest, I probably could actually still enter right here. I would just have to be a smaller position because we moved already. I mean, it's up 4.82% today. Let me go. Yeah, I'm not going to enter in here. But maybe keep an eye for the next pullback if it digests, you know, and go from there, and see how it sets back up. But I'm not going to enter in like right here. It's basically straight up. So can it keep going? Yeah, absolutely. But it's just not my style. But nice breakout here. And where can we go? Well, we'll probably right back to the high on the earnings move, right? Which is still, 12% away. But if I think about my stop right now, it'd be like what? The low of today, maybe? Or, a little bit more. So the position sizing gets a little weird there. Gap was another one that kind of looked like a setup like this. There's Gap. It actually, man, I'm missing all of this stuff. Oh wait, no, not Gap. No, was it Gap? No, but this looks good too. No, I mean Gap, the store. So it was actually, I think it's GPS. Yeah, GPS. This one did not break out. For a second there, I was like, oh man, it's starting to move. But still, this one also consolidating here. Nice strong earnings move coming in. Kind of had a pretty big distribution day the prior trading day. But if this starts to see strength, maybe come and break the high of tomorrow. That could be one to watch. That'd be on the radar. Okay. So we went off a little script there on Nike. Let's take a look at PayPal. PayPal's been just a dog too. PayPal is going to be a name that, like, if it starts moving, like, people are going to miss it. Because this thing is just, I've tried to trade this too myself, but it's been very, very obnoxious. Like, even right here, like when it started breaking, I was like, oh man, I missed it. Maybe I'll see if it consolidates. And then it started consolidating. I was like, ooh, okay, cool. Let's see what happens. And then it just breaks right back down. I'm like, are you kidding me? Like, literally impossible to get any traction in PayPal. It's kind of annoying. So my thought here is, like, if it is going to start moving, like, people are going to forget about it and they're going to look at it and they're like, oh my God, one of those crazy moves. But overall, the weekly time frame, it's been going sideways and doing this for quite some time. Last week, this little weekly candle right here is pretty nice, right? We had a big move to the downside. It recovered a little bit here. Hammer candle. Now we have an inside trading week. So perhaps maybe mark your eyes on today's high and last week's high. Because if we start breaking back up from these levels, maybe perhaps that opens the door to come back in and retest these levels here. Because really it is sideways, so there's no trend. So you can snap right back up, you can come snap back down, and so forth. I mean, technically the trend is still down, right? The small term, right? So look at the 20-day, that's down. The 50-day is down. The 200 is pretty neutral, to be fair. The 200-day is starting to flatten out here. And if I go back 200 days, 200 bars, sorry, not days, 200 bars, trading days. So it's back to here. Okay, so it's averaging everything, every price close basically from where we are now to this day here. So in the next, like, man, now it's going to be like in like what? Let me think here. In the next month, we're going to start losing this data. Okay? That means, in theory, when we start losing that data, it's going to start averaging this data. And there's a lot of time that we spent above the 200 current day. So that means we can start really actually turning up here on the 200-day moving average. So this could be a shakeout before a bigger move here in PayPal, maybe. We'll see. I mean, it could break right back down, but you never know. Just trying to create the scenario of what might be the place. So if I will be bankrupt, will it? I feel like that about Fubo. Is it Fubo or Fubu? No, For Us By Us is a clothing brand. Fubo is Fubo TV. I would not short this, but Fubo is like dog, just a or what do they call it? A dead cat. No bounce yet. A dead cat, no bounce. Oh, look at that. So SPY's coming back into the weekly move right there. So it was looking bullish. Still couldn't break that 5,500. I'm gonna take a quick break. I need to re-up my water, go to the bathroom, and then also say hi to my baby. I hear him in the background. I'll go say hi to my little babish. My babishkish. My babushki. My babishkish. So I'm going to pull up Bookmap. We can get Bookmap up here, and we got a lot more names to go over. And then I'm interested in, I kind of want to get some more exposure. So I'm going to try to see what I can maybe just get a little bit into a position there, because I'm pretty heavily cash at the current moment. But I'll go over my portfolio and stuff, what I got going on right now. Send them to FOM school. It's funny. I thought I had Bookmap up. Oh, I do. Okay. Okay, for those that don't know what Bookmap is, if you're new in here, Bookmap, what are we on? SU, right? Bookmap really, in short, just allows you to see behind the candlestick. So I'm gonna pull up ES, which is SPOO's, S&P 500. I always use jargon. I gotta stop using jargon. And allows you to see orders that are kind of on the book that are just sitting around, and you know, it's a heat map, so the red is where more orders are, and then the lighter the colors, right? And this is an auction, so just think of it as an auction, right? If you have people that are selling above you, you have a lot of sellers above you, right? Or a lot of buyers below you. You know, where does price gravitate to? Price gravitates to where there's buyers and where there's sellers. And you could use these levels as potential supports, potential resistance. Am I on the right? What's going on here? And if it's like blue on the screen, right? Like that means there's not like much going on. So they'll gravitate if supply outweighs demand, and you know, vice versa if demand outweighs supply. Let me see here if there's some key levels to point out before I'm gonna be like 5 minutes, not even. So the main levels today right here, I mean, it's not even that many. You look for areas that have like 400 or 500 contracts, right? Right now, it's literally just a chop day. Still, and we're starting to build a positive divergence, but it's still well below zero there. Yeah, just not much going on. I'm gonna go back over here. Yeah, nothing's changed really. Okay. And we're right there at about the daily view op. So I'm going to set this up. I'll be right back. Let me take a quick break. Quick break. Be right back. All right. I think my camera's overheating. Okay, I'm back. Back attack. Oh wait, I wanted to show the book that, it's a good book. Let me see here. Somebody had asked, like, where do you get started? Give me a second here. Find it. Okay, here we go. Now, in order to show you the book, I need to go into the book club. Obviously. Yeah, obviously. Okay, let me see here. What happened to my audio? Okay. Scoopity-bop, scoopity-bop, scoopity-bop. Where's my library? Ah, there it is. Hey, it's see-through. It must be green. Oh, no, it's yellow. So this book, William O'Neill, How to Make Money in Stocks. If you're starting out, I think that this is a great book. You're not going to really learn how to, like, the technicals, like the intricacies and stuff like that, but it gives you, like, a good foundation. And it gives a lot of examples of chart decks. A lot of examples of what they say. I mean, literally, the first half of the book. Let me see. Look at this. Look at this. Look at this. Let me make sure. I'm not just speaking on my butt. Yeah. This part of the book. So, okay, wait. Okay, this right here, this part right here, this part, that's all charts. This is all charts. Literally, no words, just charts. Right? So, charts. 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 All charts. And then it gives you, like, okay, how do you read some charts and so forth. This is just basic stuff. It gives you some fundamental stuff too as well. Their can slim method. And then, you know, it's a decent foundation, I would say. I think this is a great way to get started. But then also William O'Neill has some other books too that can get you into the psychology of trading. Just like that one that was recommended called Trading in the Zone is another good book. Trading in the Zone. Also, One Good Trade is another good one for psychology. And if you want to get very tactical, you can look at books by Brian Shannon. I forget the name of the book, but one of them, the new one, goes over on Anchored VWAP. He has a bunch of different ways around using the Anchored VWAP. And then there's other one prior to that. I'm drawing a blank. But both good books. Sheesh. All right, so let me get back over here. As the market's doing not much. The market's not moving. The market's just chilling right now. Chilling. Mark Minervini's books. I think I've listened to one of his books. No, I think I've read one of it. I don't think I have his books, but I think I listened to one of them. Or maybe, I don't know, something like that. I should play my Figuring Out Money Records music, the AI songs. Seriously, it's funny. You're welcome, Matt, for the PayPal breakdown. We got Tom talking about Mara. We can pull up Mara too. Long it, cool. Pen looks good. All right, we'll take a look at Pen too. I'll pull up Mara and I'll pull up Pen. Now, oh, you know what? Actually, because you brought up Mara's, let's update everybody on the cellular to shift tool, because there was I'm pretty sure that it was a sell signal, sell trigger. I didn't have it on hand going into today, but I'm almost certain that it changed. Yes, and yes. Both sell. It's in and out. Yeah. So yeah. We close at the low of the week. Okay, so give me a second here. God, the new stock charts, man. I don't know how to use this. It used to be so much easier where I just drag the image off. I hate change sometimes. Sometimes I love it. Okay, Sailor to Shift tool. For those that don't know, Sailor to Shift tool gives us buy and sell signals. The most recent buy signal was right here. Boing. Market did go up higher, but ended up reversing on itself. And we got a sell signal this last close. And this current week, we've already crossed below the low. So we're on a sell signal, sell trigger on Bitcoin. So now, I mean, I think that would be a small loss on this specific signal right here. And then it's on the current sell signal, sell trigger, it's currently down a little bit since that, because today's Monday, and I think this week rolled itself over, like on this new candle started, I think yesterday, maybe today, I can't recall. So we close at the low of the week. When we close below zero, and then the next week closes below the low of the prior trading week, that is the sell trigger, right? Okay, so now what do? Now I just pretty much wait it out. Now I wait to see if this is just a whipsaw moment and we turn right back around. If it's not, right, the red lines on the screen indicate every time there was a sell signal and sell trigger. So the last sell signal, sell trigger was right here, right? And it was right there. And then it went down all the way from 65,000, give or take a little bit there, down to almost 55,000, give or take about 1,000. And then it recovered, right? Nice recovery. And then we got the buy signal, and then it's coming back down. So a little bit of a whipsaw. The sell signal prior to that was right here, which was also a whipsaw, okay? And it came right back to a buy signal, and it caught this entire move right here. Boom. Boom. Okay? And then the other buy signal prior to that was right here. And then on the sell signals, it's caught in every big crash, right? Every big crash in Bitcoin it's ever caught. I think I pulled it back to like 2009 or 8 or something like that, or whenever, however far I can go back. Right now, it's not showing all of that, but on my video, I put that in there. I did the research there. Okay. So yeah, right now it's on the sell signal, sell trigger. Does that mean that some of these stocks are going to respond negatively too? I don't know. Maybe. I mean, there's been a tight correlation, but also lately there hasn't been a strong correlation between crypto stocks and Bitcoin. Mora still consolidating here. I mean, we broke down from this lower trend, right? I was watching this, looking for a breakout. It's down slightly today, reversing a little bit from the lows. Okay, so it's still within this little channel, and it still has, the stronger trend, the undercurrent, the underbelly trend right here, the 200-day. We're still technically above that, and it's inclining. Okay, another one was Riot. Riot, it's not the same story, right? 200-day is actually, we're way below that. And it's really trying to just going sideways in a downtrend. CLSK it's also got clipped a little bit. Okay, consolidating. I mean, some could look at this as an advanced head and shoulders type of pattern over here, or you can look at it as, I don't know, maybe people actually thought that was a breakout, but it was a fake out. Could be just tighter consolidation. This will all change. MicroStrategy actually looked pretty good. I want to see what that looked like now today. Yeah, so MicroStrategy, this little inverse head and shoulders, right? Tightened up. We broke out. This was around the buy signal area, around when it happened. And then it's consolidating here, which looked pretty good, and we had some follow through to the downside. So now on this, go figure, right? On the sell signal, sell trigger, all the crypto equities are following it, but on the buy signal, buy trigger, pretty much none of them followed for some reason. HUT is another one, and this one's actually been holding up rather well. You have the higher lows, right? And it came in. Would it be the great entry right now? I don't know about that, but you can see price actually got very tight. We broke out, and it's actually up on the day. So, if all these crypto equities are going to get hit or clipped, this can easily come right back down. But if they start turning back around and there's a whipsaw, maybe this one is the one that shines like a star for whatever reason. All right, so that was just a quick take there. The Tony Crabble book. That's a great book too. That's very very specific, that book. All right, let's take a look at SMCI. SMCI. Give me a second. So SMCI, it's a little too crazy right now for me to just kind of enter into. If I were to enter into it, does it make a great area right here? right, it's right there at that 20 and the 50 day, kind of consolidating there, but it's just a little too wild, right? Like, so where would your stop be if you enter right here? Would it be at the low of the day? I feel like that's like pretty much a guaranteed stop because it's like right there, right? So, and we kind of cracked below the 5-day moving average. We're a little in oversold condition. So to me, I would just give it a little bit more time, see how it tightens up. So I would personally, if I was to go long SMCI, what would I like to see? First off, to see this volatility makes sense. It went up for a while now. So if I were to see something that I would like, I like the big volume here, right? And it ran up, and then we had a distribution day there. But if it came back up and then started kind of tightening back up and creating some sort of a trend, and the 50 days started to flatten out to turn back up here, and then the 20 days started to cross back over, and then we started to break from this level, it's like, where it's like kind of like, oh, then you look way later and it's like this big cupping pattern. That to me would be like totally perfect. That'd be a great setup. So yeah, maybe in this area right over here, and if price can recoup and come back into this somehow and tighten back up, I'd be keeping an eye on that. It's very similar to how like PANW was kind of setting up, right? Came back up, tightened up right here. So I like PANW kind of in this area where you'd have just this tight risk here. But it seems like we're kind of like traders right now are kind of focusing other places, right? Which means that we got to focus where other people aren't. So if I look at like, why did I pull up SOXL? Like, right. And this is all meant to, like, this is all like normal stuff that happens, right? This is what happens. It goes straight up. It's going to come down and it's going to come down hard, right? That's what happens. Nvidia is still holding rather strong here on its lower weekly expected move. You can call this a flag, and it could very well be flagging out here too. Comes right back down. I mean, sure. So it's going to be interesting if we could put in a higher low and we actually see something more significant and then start breaking back up through. That would be a little bit nicer in my opinion there. Okay, so that'd be just my take on SMCI. That was Nvidia, but let's take a look at Meta. Meta also was actually kind of setting up again here too. So Meta had a bearish earnings move, and it's since recovered very well. Okay, and then in the short term, the 20 days now back above the 50. The 50 is still declining. All right, so it can pull back in, but what you'll notice here is we went through consolidations. We had some follow through. We consolidated right here. Everyone's gonna be talking right here about this little flag here. All right, so if it comes back in and we start breaking out, we can see a nice little move, maybe above through the high of today, which is 508.15, right around there to retest these prior swing highs. Okay, other than that, I'd just say there's a trend right here. Trend right here, maybe somewhere right around here, or even maybe even potentially go up even a little bit higher. Like from this, let me just draw it in actually. Say from this open. Come on. What's going on here? There we go. It's pretty spot on. So you can see we undercut this trend. Well, it wasn't a trend then, but we closed there or opened there. We opened there. We came through it, broke down, but we recouped it. And then we're kind of right within this range here. So perhaps maybe you want to just hold this lower trend. It's kind of holding within this little channel here. So playing it back up to here might be a trade. And if it starts breaking down, maybe look for a reconnect to the 50-day and see if it holds and comes back in, or if it actually starts back testing and breaking down there. Look at the 5-day moving average. You can see it's actually been responding to that quite well, and now we're right above it. It's still declining, but the longer we stay above it is more positive. So this is a good sign. So if you are long Meta, you probably want to stop at the low of today's trading session and or right here, this prior swing low, right? Because maybe if it comes down, it might fill the gap and then reboot right back up. Because sometimes gaps can act as a level of support. But yeah, 5-day, it's been respecting that so far. So the longer we trade above it, the better it is because it'll start turning back up. Okie dokes. Okie dokies, artichokes. Yeah, I got AVGO and DJT on the list. Take a look at Macy's too. Okay, let me see here. So we did PNW already. So IonQ was brought to my attention. I mean, I can see a potential bounce here in the near future for IonQ, but I'm not going to touch this one. It's kind of just getting a little erratic right here. So it's sold off pretty hard. Is it on like a certain trend? Not really. It does have a nice hammer candle where you can get some follow through with, but the trend's pretty bad. You know, I don't want to add too much of this counter trend stuff. I took SoFi, right? And this was into a trend and it was a counter trend move. So I don't want to add too much kind of counter trends move for myself specifically. But I look at IonQ. I don't know, maybe this lower trend right here didn't quite come down to it. I mean, if I draw it up, I guess you can consider this actually the same, you know, kind of right in that same zone. So I can see that as a counter trend type move too. I just am not trying to add too much exposure myself personally to too many counter trend type setups. But overall, yeah, these ones, if you're long it, yeah, you got to be either you really believe in the company that something's going to happen, but overall the trend's pretty bad. So even if a bounce up, I mean, the saying with trends go, the strong stocks get stronger, weak stocks typically get weaker. And you can see it was a weak stock here, it bounced up, yahoo, oh, back down, oh, this is the low. No, sorry, it wasn't the low. And the same thing goes with strong stocks too, on the flip. AMGN. Yeah, I mean, AMGM had a really bullish earnings move here. It came in pretty hard, and now it's kind of creating a little bit bigger of a structure, and it's somewhat breaking out. I mean, I'm not much of a fan of going long right here after this move. So I'd like to see it maybe consolidate around 320, get a little tighter, wait for these averages to catch up a little bit. But overall, I mean, it looks just like it's like in this larger kind of swinging channel. And one way you can, you know, measure a move is you look at the length of this thing, and when it breaks out this base, maybe it doubles that. So up to 340, that would be like a technical measurement. If we go to the weekly time frame, we had this obviously big move from this little tight wedge pattern over here, and it's coming, I mean, it's not too far off from these highs. So to come retest it and come back up, I mean, would make sense to me. So Amgen looks pretty strong stock, right? Strong stocks, like I said, get stronger. So Amgen looks cool. DJT is the social media stuff. I'm not much of a fan of the look of this chart, but I can see why people might want to trade this and quickly, because you get these quick, like crazy pops. Today it's up, 24%. So yeah, I'm not entering into a position when it's already up 24% for the day, but maybe perhaps, and the 5-day moving average is declining. So if this comes in, maybe flags out and creates an opportunity where you can kind of do an early setup to play back to the high of today. But yeah, it's a little frothy right here. So if it got some more gas in the tank, I'd just be a little bit more careful, because you'll probably get some profit takers in and around this area. The price will try to digest, volumes might dry up, and it could set up again for a nice little move there. But as it stands right now, yeah, strong move. And now I'd say it's more important to wait and see how it consolidates. Like if I go into the smaller time frames, like the 5-minute, it consolidated pretty nicely here. Strong move, consolidated, played out, right? And now it's kind of coming in a little bit. See kind of where it goes from there. But yeah, overall, just look at the daily time frame. I mean, it's just all over the place. It's very hard to gauge. And, let me go to the weekly time frame. Yeah, just a little bit too snappy for me. A little too snappy. Good trading stock, because it's high beta. Moves some days. AVGO. AVGO had a killer earnings and a killer follow through. Right? This was the earnings move on earnings day, and it blew through that day one like a 2 standard deviation move. Followed through more to the upside. And now we're actually coming back into and around that earnings expected move. It'd be interesting to see if, markets sometimes have memory. Perhaps it comes into this 1600 level and we bounce from that level or consolidate from that level. But right, strong stocks get stronger. It got ahead of itself, and now it's coming back in. So let's see how it digests. Would it be smart to just enter right here blindly? I mean, if it's a full size position, probably not. But if you're trying to like, hey, I'm going to enter here. If it comes in a little bit more, like to the 20-day or even to the gap fill, I might try to add a little bit more. And then if it actually starts seeing strength, I'll go into my regular position. Maybe that could be a way of about it. could make sense. But right now, it's just we're getting a lot of volatility, right? It's expanded, now it's coming in a little bit. And like I said, strong stocks typically get stronger. So to see this thing bounce back up at some point, yeah, probably going to happen. Probably going to happen. When? I wouldn't know. But maybe perhaps at 1600 level and or the gap fill level down here would be a couple of levels of interest there to keep an eye on there. TME, I believe, was on the tight list. 10-cent music. Now, I don't know for sure, but I believe this is a Chinese equity. Okay. But overall on this one, very strong trend, right? The 200 is going up, the 50 days, you have a nice spread between the two. And then you have a nice consolidation taking place right now, right? It's currently. All right. So right now, I would say it'd be more important to kind of get back above this kind of $14.50 to $15 kind of zone there to show its strength back, right? Go to the 5-day moving average. It's declining still. Strong move here. Maybe perhaps it starts to flatten out and come back up. And that's where you can find the opportunities. But overall, look at the weekly time frame. Look at this thing, right? Went sideways for a while. Boom, markup phase clearly. And now we're kind of consolidating back into the 10-week right there. And it's a very bullish trend so far. You do have the MACD starting to kind of wane a little bit there, but overall, if this can hold this structure, maybe it gives us another setup, boom, to like see another push higher there in TME, in 10-cent media. What I do like about it more specifically is if it breaks down, you know where to get out, right? And if it breaks up, I mean, this thing could continue its trend. It'd be a trend continuation type of play. So good looking chart on the daily and even the weekly in this current context. In the current context, yeah. Okay, so there's TME. Let's go FSLR. I know some solar names have been kind of just coming off here a little bit, right? We had this flag, broke out, and then we came in. Now it's just kind of consolidating. Maybe just like a bigger wedge pattern here, but it is getting tight these last 4 or 5 trading days. I'm not one to just enter blindly right here because if it keeps going down, I'm not one to really like that. So I like to go into the smaller time frames here and then look specifically at that 5-day moving average. I'd rather see it flatten out and see it come back up versus enter kind of like right here. And if I miss it, I miss it. If I don't miss it, it could be for the better. But you can see right at about this area, we're getting hung up at about 265-ish, right around in here. So if we come in, I would like to see price actually get above it, the 5 days to start curling back around. And then maybe then on the daily structure, it'd be more believable that this right here can play as like a larger term, kind of like wedge-ish, flag-ish type of, structure there. All right, Amazon. Amazon still looks really good. Yeah, Amazon looks fine. Actionable in this current moment? I mean, probably. It's like literally right by the highs. So, I mean, we're probably going to be taking this out at some point. I would like to see it come in just slightly more, maybe get a little bit tight there for just a day or two more, and then go for that. And then the 20-day kind of catches up, maybe something like that. And then I know where to get out if it's wrong, right there. So it can just give me a little bit better of an entry. Sometimes that's not the case, but that's what I would be kind of looking for there. And then that would mean also the 5-day moving average would probably come back into it a little bit. And the 5-day moving average is starting to turn here. So you can see it broke down, boom, flush. It respected the declining 5-day, and then we got above it and it respected that. We started moving up and started turning back around here. Okay, so yeah, if it comes in a little bit more, I'd be looking for it to start seeing strength after that, and then potentially look for an early entry to come sweep the prior swing highs. So I would say that one's pretty close. Tesla, I already have a position with. I'll pull back up Tesla. Tesla, like I said earlier, it just can't get out of its own way. I don't have a very high conviction on this, and I'm looking personally for Tesla to try to break that year-to-date anchored VWAP, right? I pulled up, let me pull this up here. Here it is. And you can see it's just getting kind of hung up there on that red line. Let me remove the purple line. Okay. So you can see every time we come up to this anchored VWAP, we've been rejected. And now we've been really testing it here. So I mean, I took the position. I think, it's possible that we break through it. My conviction's not high. So my stop loss is right over here. And if I get stopped out, I'll look to see if it resets up again. It did the same thing over here, right? I played the breakout, boom. And I just thought that maybe we'd get the continuation. We didn't. I got stopped out for basically a small loss to break even. Then I've been waiting. Then we saw a move, and now I waited again. And now I'm trying to play it out to see if it does it again. I did the same thing with DIY. It took me multiple tries, managing the risk, and then finally I had a breakout, right? I took a 2% loss, a break-even trade, and then all of a sudden it was up 20%, and I was like, there it is. Hello. Tesla, I don't know if it's going to be the same situation or not, but I'm positioned for something to happen like that. Okay. S&P 500 right now, just trading around the anchored volume weighted average price for the day. Market net flow, still below the zero line, kind of just chop city. Gamma lines were right at that 54.90. Those were some zero date levels earlier, and 5,500. So not really too much going on here. Okay, so let's continue on and look at these individual names. And I still, like I said, want to find something here to maybe get a little bit of exposure show. SQ. I mean, SQ is kind of just a mess. I mean, just look at this. Just a mess. Not really trending here. So let me go to the weekly time frame. I mean, I just prefer seeing some more of a trend to like get a little bit more excited about it. It just ain't there. So, I mean, you can look at this and be like, oh, but it's, wedging. And I would say, yeah, that would probably be a potential thing there. It gapped way up today. It's up 2% today. It's off the highs, but it's kind of just trading around the 200-day. That's flat to inclining. So perhaps, maybe it could be setting up for a move, a test of the 50-day, but even the 50-day is declining hard. So if it breaks above it, just be aware that the trend could pull you right back in. If I look at the 5-day moving average, we're above that, kind of coming in here a little bit. So perhaps it might be a shorter time trade for a bounce up higher. For a longer swing trade, just looking at the daily time frame, in this context, I would be a little bit more aggressive, and I'd probably be looking at the smaller time frames, something like the 15-minute time frame. So I would like to see maybe if we can get a gap fill, and then we hold the 5-day moving average, it starts inclining once again. Boom, maybe an early type of entry to play it back up to the highs, or potentially move it higher too, and then try to catch a little bit of that move and try to follow the trend up if it's going to make some sort of a move. But right now, I don't like entering just right here, right on that. I mean, I still, even at that point, I would rather enter in something like this, than something right here, and then play a breakout or something like that. So it just depends on your time frame, right? You might look at it at the weekly time frame and you think it's going to go right back up. Okay, that would, because you can look at this and it's just a big range, right? And right now we're pretty much in the middle of that range. So you can be like, yeah, no, I think if I enter right here, boom, boom, I'll have a stop there, and I think it's going to play up right to the top of the range. And that to me that'd be a quality setup, right? You just trade. There's your risk. If you're right, cool, you can play it for a great gain. If you're wrong, okay, small risk. So it just depends on how you set it up and your risk position into it. That's all. Bank of America. I'm actually interested. Let me just look at financials really quick. Financials are holding up pretty darn well. Which now that I say that, I'm gonna pull up Berkshire, because this was one that I pulled up a while ago for trade ideas on my show. And you can see Berkshire. It is the largest holding in XLF, I believe. Let me mark it. Let me analyze that. Yeah. 13%, then it goes to JPM, then Visa. So Berkshire B, right? You can see here, nice move up. We had lower highs, higher lows, price getting very tight, and we're starting to see it break out of this today. So am I going to chase right here? Maybe, and then you have a stop right here, but it would be nice to see kind of just pause up here and then get ready for a break from that to come test these highs, because the trend is pretty strong here. So Berkshire, these financials look, pretty darn strong. All right, it got a little frothy here on this move, boom, and now it's coming in a little bit here. Okay, so let's play catch up. Let's 5-day moving average catch up, see what it does, and then go from there. So that's Berkshire. I know that's not what you asked for, but and then also take a look here at this structure, right? You have this kind of cup handle sort of type of formation. And then you have the breakout and a nice like multiple week consolidation, obviously in bullish context here too. So, I mean, it looks pretty darn strong in my opinion. And even if it ends up turning to be weak, you have very, very, dialed in, level of risk to manage there. So that looks pretty darn good. Bank of America was the one they asked about. I mean, this one's a new high today, new high on the year for today. So yeah, it's strong stocks get stronger. Would I be right here in this consolidation? It's not my favorite look, right? I would prefer more something like Berkshire, how it like went sideways and and then you play it where it has some upside. But you can't go wrong buying strong stocks really, because they, like I said, they typically get stronger. If you bought here, right? Yeah, it was not a great entry, but it ended up going higher, right? So if I buy here, will we get some follow through? Probably get some follow through, right? But I would prefer a little bit better of a consolidation there. So if I look up at the 5-day moving average, it's starting to turn back up. We gapped above it today. Yeah, I mean, it's a good looking chart. I would just prefer more of just a little bit better of an entry. So, just a little bit better of an entry. MOS. Yeah, MOS is just a pretty bad trend here too. So, I mean, it's been a really bad trend. And it's we're seeing a little bit of a bounce here today, these last few trading sessions. Getting above the 5-day moving average. So if you're going to be playing something like MOS, I'm not going to enter here because you have these divergences there and it's kind of went straight up. So if I enter here, it's like, do I really want to hold if it pulls back in to maybe go higher, or, hope that it just goes higher from here? I prefer to get a little bit more tactical in that type of situation. So, if I was looking at this, like, let me go to the 15-minute time frame over here. Okay. Look, MOS. Now I already know it's in a bad trend. Okay, so if I go to the 15-minute time frame here, okay, and we started moving from this bottom. There's a big volume day over here, or maybe that was the start of the trading session, but I'll maybe just anchor in a volume weighted average price to the low here. So it's kind of been respecting this swing low anchored volume weighted average price. So perhaps maybe I would be looking at this as my level of risk. So if this came in, I would like to be a little bit closer, right? And then start showing strength. And then maybe I'd have a stop there, like a 50% there, and maybe a 50% there. So if I get stopped out, I can have a little bit on and I can add to it if it turns back up. But that's maybe how I would structure that type of a position if I'm playing, something that's been getting kind of beaten down like this. But like I said, it is seeing strength. So that's why I'm saying, okay, is the average buyer from this bottom? They're in the green. They're pretty extended from the average price from who's bought from the bottom. So you can potentially gravitate towards it and set back up. And that's what I'd be kind of watching for versus just kind of blindly entering in this like very moment. SPY right now is also at the daily volume weighted average price, which is also the week to date. We're just kind of sitting on there right now. Sitting on that level. We talked about Mara, and then there is Penn too as well. That was brought up. Pencil. Pen. I believe this is like gambling, correct? If I remember correctly, like a Penn Entertainment, gambling or something like that. Wasn't there news about Penn recently? So I forget. But I know that Dave Portnoy was a big person involved at some point, or maybe still is. I don't really know. The trend is down, right? 40-week, 30-week down. The 10-week, though, you can see it respected it multiple times here, and now it's starting to hold above it. And then this week, right, it's a weekly time frame, it's trading inside of that prior week. So if I look at the daily time frame, you have a few trading sessions that are in this prior day. So it's actually showing pretty good strength here, right? So we broke out of this little downtrend. We're seeing some strength. I'd prefer to see a little bit more time going sideways. And just keep in mind, you are still below that declining 200. So if it comes down a little bit and the 200 and the 50 days start catching up, that to me, I would like for a shorter term setup, right? And then I go to the 15-minute time frame, same sitch, right? Is it above a rising 5-day or not? But yeah, overall, I mean, the trend is not great. but we are starting to see a little bit of strength. And then I did notice that the MACD has been showing some, strength here too, and we have a bullish crossover that happened. Makes sense on that big week over there, the prior week. Okay. But really, if you just look to the left of the screen, this thing hasn't gone anywhere for a very long time. DKNG, kind of falls within this space, I think. And you can see DKNG went sideways down for a while. Excuse me. And then it started breaking above this, and then it started to flag out. Okay. So DKNG, you can probably go into my trade ideas if you're in the Discord. You can go back to these dates because I'm pretty sure I had DKNG on way back over here as one of the trade ideas when these things tightened up. And then you can kind of follow through and see, it doesn't always play out like that, obviously, but you can see that, just go back and you can look and like, oh, he really does look at setups that are just tightening up. And you can see the 40 week started flattening out more towards over here. And then we got above it. It really started curling up. And this right here presents itself as opportunity. As these turn back up, you're like, wow, we might go into a stage 2 markup, right? There's 4 stages. You have accumulation, markup phase, distribution, and then you have a decline phase. So 1, 2, 3, 4, and this is fractal, right? This could be large time frame, like the 40 week or the 200 day, right? Respectively. You can look at the 5-day moving average. So you'll have a lot of different, you'll have a lot of different of these, but within littler tiny moves. You'll have stages 1 through 4, but on a markup phase, right? Or stage 1 through 4 on a distribution phase. So it's always good to look at the larger time frame in comparison. But yeah, DKNG, we kind of falls within that category. Getting a little crazy over here. There was very clean setups multiple times, but now it's getting a little wild. Right? And that makes sense because you get these very clean setups, right? These very clean, tight setups, and then you get like a base breakout, a base breakout, a base breakout. That's 1 base, 2 base, 3 base. And now, when you get into the 4 or 5, it gets a little bit more, volatile, whipsaw. It could be distribution or, taking a little bit more time to digest and then find, obviously, for new buyers to come in, price to get tighten back up and potentially set itself back up for another run. But yeah, you can kind of see that there. Just respected it really well. This is a very good technical chart, right? And then now, it's just a little all over the place. Okay. Oh, you're welcome. Love set match. Okay, I want to pull up some of my charts that I'm kind of interested in. So give me a moment here as I kind of look through this stuff. First off, I should probably update my portfolio and see what's there, what's going on. I didn't even realize I had a position in that still. I'll keep it, whatever. Celsius I liked for a counter trend move. I still have a little on. Celsius I still have a little bit of a position on here. I forget exactly the first entry, but then I entered again on this day. So it's basically slightly up, and then I took some profits. So I have a little bit on still, and the thought here was it was very extended. So this is another one of those counter trend type of trades. So I start small, and then I try to add into it if it makes sense. And we saw a nice little bounce here, and now it's kind of just consolidating. My thought here, so this definitely looks like a double top, right? And we broke through that to confirm it as a double top. But a lot of the times when you get these breakdowns, you get back tests, and that's kind of what I was looking for, was just a back test up into this area. After already an aggressive move down. So we see this volume day here, pretty strong move, and now it's price action's contracting here. So, I wouldn't be shocked if it follows back through to the downside, but I wouldn't rule it out that we still can't potentially bounce still back up here. So I'd still be kind of on the eye there. So I think I'm just going to leave that on and kind of just let it do its thing. It's, like I said, it's a small position. 5-day moving average, it's like trying to hold on, right? So the 5-day moving average, you can see it's flattening out here. So if it starts breaking down, watch it. But it's holding so far, and it's getting pretty tight here. So yeah, like I said, I would still be looking for maybe to come back up to this 67 area. Maybe more, right? Depends on if it can get up there. But I like actually how this is setting up currently, because if you're in it, you can just get out right here if you're wrong, and then see where it goes. And if it sets back up, maybe you can re-enter. But so yeah, I'm just still in that little thing. I even had on the another counter trend move I had on was beyond, but I think I really forgot that I had this one on because it's basically invisible. I'm down $18 on it. That's how small my position size is on this thing. I'm down $18. I'm like, my entry was pretty much right here. Okay. And this one looks like crud, to be honest. And this one's not bouncing. So this was for a counter trend move too, and it's below the 5-day moving average, and it started holding here. I will say that the RSI is coming down. There was a lower run there, so we have a little bit of a positive divergence there. So yeah, probably under 13, I'm probably out. Not really the fun. Not those trades are kind of just whatever. So let me get into some ones that are actually like a little bit more bullish context and see if we can get something going there. Because I'm not too excited about those. It's kind of one of those things, if we start to see a rotation, will those things start to really move? And we're starting to see a rotation today, but those are not moving. So give me a moment here. Let me see. What is, there it is. Oh, come on, little guy. Oh, man, I'm so confused. This new setup, man, when they change it on me. Diddly diddly do. All right. Checking on the markets. S&P 500 is getting a little bit of a crack here, down underneath the daily volume weighted average price / week to date. So it's getting hit here. And I want to just see if there's anything here setting up. I'm interested to see how's Nvidia responding right now to all of this. Kind of coming in. Still above the weekly thing. Like I said, it kind of looks like a bear flag, but I'm not interested in shorting it after it moved like that. On these strong names, I prefer to short like on a very crazy move higher and then just have a little bit on for a potential move down, which I did. I didn't do it in Nvidia. I did it with an SOXS, and I got out too early, but then again, I didn't know it was going to continue to fall. Okay, give me a second here. Okay, let's go. Oscar's asking, do you think that the market will rotate into AI stocks that haven't performed as well, like AMD, rotate out of big caps? I think it's possible. Yeah, I wouldn't rule that out necessarily. But my thought also is, if they keep clipping Nvidia and it keeps coming off, right? It's still great bullish context, right? It is, and this is normal to happen. Like, this ain't crazy to me. 3 days down, it's an aggressive move down, but it was also an aggressive move up. All right. I wait to see if it contracts. I'm not going to just enter in blindly, so it gives me an idea of risk. Like, right? Look at these tight little pockets here, right? These tight little pockets of contraction, even right there, right? That's what I look for, and it's just being aggressive. So can it come down more? Sure. Can it bounce right back up? Yeah, probably will, to be honest. Like, if you try to short these things, I mean, you just got to be willing to just get your face ripped off a few times, because these things could come right back up. You can be like, oh, I was wrong. And then it could slam right back down. And then everyone's like, see, it was so easy. It was a double top. Or it did this and we're like, oh, it's a head and shoulders. And then it goes like this, boom. And it goes for another 300 points. It's when you short it is like yeah, my goodness, you got to like be very, very focused in on timing, position size. And that's why when I personally short, it's smaller positions, and I feel more comfortable going on extended moves. And if you're an options trader, you can look for like bearish spreads, right? Bearish put spreads or something like that, where you have very defined risk. And it's not just like a one or all position. It's like going up against some of your other positions, right? Yeah, I'll pull up MU too. What was I doing? I was trying to pull up some of my names. Yeah, MU. I mean, it's the same situation. These stocks they're pulling back after strong runs, right? They're not down and out yet. They're not, right? So if you're thinking about like, okay, this is the end all be all here. Okay, I like why do I keep pulling up SOXL? I keep on doing that. If you think that this is the end all be all here, the higher probability is that you would be wrong, right? That you'd be wrong in saying that. Right? Back here, go back to watch the videos from this day. What did we say? What did we say specifically on this day? It was a strong move up. And when you see a move like this, where it gaps up, it closed low, and it had a huge volume, I said, now is the time. It doesn't mean that the market's crashing and it's over, but that right there is a signal that we're probably going to consolidate, and it could take months, right? Go and watch either it was a live stream or if it was just a regular video. And that's where you can go through these periods of consolidations. And it went for what? How many trading days did this go sideways? It went over to here, right? Or no, basically even more. It went over to here, right? From May to May. So it went from March to May. So a few months. Okay? And then it started going higher. So when you see this, you see another, it's not a crazy volume day. It was still a pretty decent sized volume day, right? Versus the other ones. Bearish engulfing candle, very same structure. You getting some follow through to the downside. You did the same thing over here. So does this mean that we're going through a larger period of consolidation? Is it going to snap right back up? The higher probability is that we can just consolidate. Does this mean it's the top? I mean, like I said, the higher probability is that we just consolidate, digest. People get freaked out of their position. They take profits, and then all of a sudden they get excited again. Unless an exogenous thing happens to take the trend completely out. Right? But the trend right now is up. So if I look at this, I'm like, okay, well, I'll show you a very simple little, some people like the fibs. What is a Fibonacci retracement? Yeah, right from this low. Come on, little guy. Come on, little guy. There we go. Boom. So even, come on, dude. Come on. Let's go. Come on now. Are you kidding me? Let's go. Come on. Dude. Oh my God. Come on. Oh my God. Come on. Oh my God. Come on. Okay. Come on. Okay. Come on. Okay. Come on. Okay. Here we go. Draw the fib. Oh my gosh. All right, ES is coming in a little bit harder now. I'm gonna just pull up. So SPY's coming in. So nice consolidation here, tightened up really well. Now we're expanding, but we're expanding to the downside. Is there a trend worthy? Not really, honestly. We could probably snap right back up. 54.65 to the downside. I'm gonna try to draw that in. 54.65 would be right here. So just the lower portion where we've already tagged a couple of times. That's just 0-date levels. And then 54.75 too, which is where we're at basically. So I'm not reading too much into that one. We'll see if it gets if it has any bite to it. But right now, they're still adding some liquidity overhead. So I'm not interested. Let it settle out. What was I trying to do? I was trying to draw this fib. It's just not letting me draw apparently, because why would it? Let's go to the daily time frame. Nvidia, I'm going to use this platform. Retracement. So see this, how it bounced right here? It fell right into the year to date. That's not a retracement. Oh my goodness. Right here. Boom. Okay, there. So even if this thing sells off significantly harder, I mean, the golden zone from this low to this high, the golden zone meaning the fib retracement level, right? If you want to measure that, it's which is the 61.8% retracement to 50%. Even just a half retracement of this level would bring us right here. And that's not even like, that's where we kind of gapped up from. So this is considered the golden zone, and people would probably lose their marbles if it came down here. But if you're paying close attention, these can still set up moves to go higher, right? I think, what did we talk about on one of the prior videos? We were looking at energy names. Look at energy, look at. This was like literally just spot on. Did you see this little gray box here? What were we doing? We're literally measuring, oh, now it's working? So I'm not gonna draw it because it's not gonna let me, but I'm like pointing at the screen. So do you notice here where the gray box is? It's between the 50 and 61.8% retracement. All we were doing was showing the consolidation there, and it moved in, and we showed some other names like CVX, right? Look at this. If you traded that right here, you'd be up, because we talked about it right here on this day, you'd be up. Come on. You know, like 4% or so. And then XOM was another one. Look at it. Boom. Does that mean that like everything's fixed and it's going back to these highs? No, it doesn't mean that. But you're just using tools to kind of help gauge you. So yeah, if Nvidia comes in or goes up and then comes in, does the exact same thing that energy did, you can still watch these levels, you know, the 100 psychological level to 108, this zone in here. Doesn't mean it's going to get down there. Now, another way to approach this, right? You can do the handoff. So see how the year-to-date started here, and this is basically the first tag of it, and it said hello and ripped higher. So go ahead and anchor a volume-weighted average to this. Boom. Now, not only do you have confluence between the 50% and the 61% golden level here, guess what else is hiding out over here? The anchor VWAP from this swing low. Okay, so let's take it another step further. Anchor volume weighted average price to this bearish engulfing candle, because we did the same thing over here, right? We did the same thing over here where it got like it consolidated, oh, it went for it, oh, it broke down, watch out. And then it kind of claimed through, and then finally it broke through it over here, consolidate, and followed through, okay? So now you have this anchor VWAP, this anchor VWAP. You could technically do the earnings anchor VWAP too. I believe that was anchor. The earnings, and you can see price action is coming into, was that earnings? Correct me if I'm wrong here. Yeah, that was earnings. Okay, so right now, Nvidia, even in this area, has the possibility for a bounce. So hear me out. Nvidia, let me pull up to the 15-minute time frame now that I just did this. Doing this on the fly, yo. SPY, Nvidia, where are you at, little Nvidia? 118.52. Okay, so boom. Okay, so Nvidia, wait, no, that's not what I typed in. 118.52. There we go. Okay, so there it is. Nvidia is coming right back down to its weekly expected move. Okay, right now. So what's the upper weekly expected move? Properties. I swear I'm going to pull up some names that I actually want. I'm trying to find something actionable now. I have them on my screen, but let me see here. I'm not in a rush in this environment. I'm just not in a rush right now. So I apologize for that, but 34.62. Actually, I guess I'm really never in a rush. Not anymore. Okay, so there's the expected moves for Nvidia. So we're coming back into this, and you can see it's holding the daily volume weighted average price, or the week to date, okay? Then we have the 50% retracement level, the 61.8% retracement level. And then I talked about what day did we anchor to? Like over here, I think it was, right? So let me go here. Base is too far. Of course it is. Why wouldn't it be? Okay, there. There it is. Okay. I'm just trying to level y'all up, dude. Okay, I'm just trying to level y'all up. So, no, that couldn't have been it. Well, no, maybe it's right around there. I thought we tagged into it. Let me go back to the daily. Ugh. No, or that's what I meant. Okay, my bad. Let me go back to the 15-minute time frame. That was right, but I wanted to go to the earnings move, which was right here, right? That was earnings. So that is what I wanted to anchor to. Okay. So take a look. This is a place to be a little bit cautious because now price action, right? We gapped up on earnings. We started moving away from it. And now where are we? We're actually starting to crack below. We're kind of trading at the earnings expected, the volume weighted average price. And we're in confluence with the lower weekly expected move in here. Okay, so if it does want to continue its path down, I mean, this is a level of confluence that we can look for bounces. So how do I look at, what do I do in this situation? This is exactly what I'll do in this situation. And I might even take the trade. Maybe not Nvidia, but maybe in like SOXL. Okay. We put in a low. That was the weekly expected move. So the market did what the market said it was going to do. It didn't break down yet fully. But now we have an idea for risk. If it's pulling in here, if it starts bouncing and we put in a higher low, or even if not, maybe we undercut it or so forth, I'd be looking now for strength to break the week to day anchored VWAP, right? Right there, boom, right here. So now if we put in a little double bottom maybe, okay, boom, pops up. Maybe that might be the case. And then we see a snap back up to a gap fill. And then you would pay attention to the swing high, right? Anchored volume weighted average price from this high on this big down day. Okay, and then you have also in confluence the 5-day moving average that's declining. So it's literally a tactical play where you say, hey, I think that after 3 days strong down, I want to take a shot down in this range after seeing strength. Here's my risk. Here's my potential reward. You got, risk 1 for potentially 2, 3, who knows? And you can go from there. Okay, and if it breaks down, you can just wait, see if it turns back up, or if we get significant sell side, it may come into this golden zone where you can look to reset up again. That's how I would approach this one. Nvidia, okay? Is that pretty cool? Pretty cool? Help out? Is snow still melting? Snow's melting? Yeah, like I said, I'm not really too worried about the ES dropping like this. They are adding, definitely, overhead supply. But when I look at like market net flow, like you can see, like they filled this liquidity and then they added it overhead. But if I look at like market net flow, it's bearish. It's whatever. It's not giving us really good insight. And then it's still, I mean, we're just traveling within the risk parameters of the day. We're still in positive gamma territory. Let's pull up the 15-minute time frame for SPY. That doesn't look right. Oh, yeah, because it's not SPY. Yeah, okay. Yeah, we're below the 5-day moving average, but it's still inclining at this time. So is this, one of these? I don't know. Right? I don't know. Potentially look at this trend right here, or like this, if I just draw it out. I don't know. I feel like somebody would call this a head and shoulders. They may be right. But we're still well within the weekly risk range, which I would still expect that we're going to be tagging one of these for sure. So I would say that if we do break down of this little pattern, I mean, that would probably be a measured move right down into there. Just double the trend right down into 53 or 538. But the market net flow is not like crazy right now where it's giving us like, yeah, it's very bearish. It's not, right? It would be if the red line was up here, the green line was flatlined, and this was all red over here. Then I'd be like, yeah, watch out, okay? Watch out. But that's not the case. So right now, to me, this is chop. And where are we for the day? We're flat on the day. We're down a basis point. It's literally unched on the day. Okay? Unched. Okay, I want to just take a look quickly at my charts really quick. Let me refresh. I just want to see something here. Shabba dabba dabba ding dong. There's been some good utilities trades that have been going on. I was interested in SRE. Ah, man. Okay. SRE might be actionable here. So notice here. So SRE, I don't know if this is, I think this is a utility. I can't remember. I'm not 100% sure. But we did get a nice run up here, and then it's been consolidating tightly. And the 50-day recently crossed above the 200. The 200 is turning up, and the 20-day, it's been respected, but we're back above that. So to me, this opens the door to come retest these highs. If I look at the weekly time frame, right, we're seeing a little bit of strength come up here. It's kind of wedging here too as well, and maybe breaking this little downtrend over here. So could potentially turn into something. So SRE, I'm a little interested in it. So if I enter here, where would my stop be? I'd be measuring my risk down to around the 50 days. So this would be the risk, and I'd look for a continuation, a measured move up to this swing high and higher, right? That's what I'd prefer. So not a horrible looking chart there. Black Rifle Coffee has been one, or is it, I think it's called Black Rifle Coffee, BRCC. This was one that I was watching. It's still pretty tight here. I'm just a little hesitant on these lower price stocks. So no action's been done there. Bros was another one I was looking to see if it set up. And it kind of is setting up here again. A little sloppy, but you can see that we saw some nice move on earnings. It consolidated very nicely here. Definitely missed that trade. And then it's, doing it again here, like I said, a little sloppy. So you may have to go into the weekly time frame. Not the greatest looking weekly time frame. You have these like kind of shooting star candles. We have an inside trading week here. But overall, if you look at the daily, like you have a pretty well-defined area of risk. And we're kind of just tightening up here within that area in bullish context. So Bros is on the radar, actionable right now in the moment. It's hard to find anything actionable right now. KC, CASY. I'm not chasing that. SIMO, SIMO. This one was looking good, and this one broke down. I know it's a good one that looks pretty good. Chubb looks pretty good. So nice big move here. I think this was on like the Buffett news, if I remember correctly, that somebody was, Trader Joe, I think, told me that Buffett took a position, and my guess would be that it was around here when people found out. But yeah, it's 3 days kind of tight right here, and it's also in this flag formation. So this to me looks like a pretty decent setup for if you're like looking at risk from there to this high or to that low. A little frothy right here, but then again, if you're measuring your risk properly, and you have a stop under here or this low, Chubb looks pretty decent. It's holding this gain pretty nicely up here. 5-day moving average, the longer we're up there, it'll catch up. Weekly time frame, clearly in an uptrend. Consolidating, and you can see right here, it's consolidating pretty nicely here on the weekly too. Look, that's a pretty clean looking weekly chart. All right, so the target would be probably around 300, right? If you just measure a move from this low, if you're like just like a flag measurement, right? Boom. Dude, my thinkorswim be tripping, yo. About 300. I'm just rounding it there. A measured move would take it from the low to the high, and then the breakout point to the wherever, or the swing low to the whatever. It could be potentially be around that 300 marker. Another psychological level, or the swing high. So yeah, Chubb looks pretty good. I think that one, I wouldn't mind having some. It's holding up rather well right now. I don't even know what this company is. Is this like an insurance company or something like that? Technically speaking here, it's a good looking chart though. Coca-Cola, the Europe one, CCEP, Euro-Pacific, was also breaking out of this little tight area right here. So this one looked pretty decent. I don't know what KO looks like, which is the Coca-Cola company. Not as clean of a look, but it's seen a little move today. So what is consumer staples be? They're kind of consolidating. So a couple of names, right? So Berkshire looks somewhat actionable. Berkshire B. So BRK-B. Okay. We're breaking out of this little wedge. So, it's already a strong move. It's coming in a little bit here, but on the daily time frame, and even the weekly time frame, it looks good. So put that in the notes. I'd say Berkshire would be one to watch. And it's close. I'd say it's pretty close to being actionable. If not, depending on how you set it up, maybe it could even be actionable. Apple was another one that was kind of on the radar here. This one came in a little bit, but you can see it got actually declined by the 5-day moving average. So to see how this one consolidates, I don't think it's actionable in this current one. I want to see Amazon. Amazon's coming in. Tesla came in. Everything came in right here. Everything's coming in right now. Everything's coming in. Almost everything. Let's see. We still have 76 advancing issues though. So the market's coming in, but we have way more advancing stocks. This is a funny environment because now it is a stock picker environment. This is what happens when things get beat up for so long, and then all of a sudden the big names are the only things that hold up the market, and they start coming in. Now the scary part is if the big names really start coming in, they can bring in this market too. MRK was another name that has been on the radar for a moment, and then I traded it and then I got out, but it's looking like it's setting up again. So remember MRK was right here. I talked about it there, and I think I traded it right there and got out right here. And then I said I just kind of wait to see how it sets up again. And it's, not the greatest looking setup, but it is coming back into its prior pivot area. The more we test it, the more likely it could potentially break. And it's already a strong move into that area. It's not my favorite looking setup, but also you look at the weekly time frame and you're like, if you set up a trade like that and you're like, yeah, I'll have a stop down here, and you think it's going to be a longer continuation to the upside, okay, like to 150, then you start making sense on your risk to reward. I already talked about DIY. I didn't talk about DKS, but I did, I think over here, how it's kind of flagging out. So that looked pretty clean. Some of these retail names looked really good. I think even ROST was kind of on there. Yeah, it's okay. It's strong looking. Man, I'm just... Google... HCA is tightening up pretty well. Dr. Pepper, KDP, Nordstrom's, some of the names that are just getting really tight here. But I'm just not like pumped up about any of this stuff right now. Like I just don't feel like entering in. Oh, my camera's off, my bad. Let me cool down my camera. Give me a moment, please. My camera. Oh, looky dookie dookie. Yep, it's insurance. Oh, okay. Yeah, I that's what I thought it was. Yeah, give me a second. My camera's off. My camera died. It didn't die. It's just it overheated. It's overheated. It's overheated. Okay, so yeah, as far as, like I said, on the sell order stuff, like they added these orders above us. So yeah, there's just overhead liquidity. There are sellers stepping in. But it's not like I'm not like super convinced that it means anything yet. I mean, I'm just not. Would I short it? I'm not like confident that it's going to go down. I'm not confident that it's going to go up. No, it's kind of just puts me on pause, if anything. And I'm starting to see that in a lot of these names that I've been trading. But the reason why I'm not really too worried about that move specifically is because I'm looking at market net flow, and it's like literally just telling us chop. So it sells off, it can snap right back up. It's not giving us a clear defined reading. And this is where people get faked out a lot. And really, I mean, we're down, like I said, we started the week right here. Right, we went up and now we're back down. We're literally unchanged. We're slightly down. We're down 5 basis points. I do find it interesting that we're down 5 basis points, but yet most of the S&P 500 is up. Right, much more advancers than there are decliners. So I'm just letting it play out. Letting it play out. You see, they keep on adding liquidity overhead here too. Maybe some sellers are stepping in, but let's watch Nvidia. They're not really taking it out. Microsoft's down. It's hardly. Apple just pulling back a bit. I'm not convinced. I'm not convinced that this is anything, but Berkshire B. Tesla, like there you go. There's Tesla, man, doing what Tesla does best, reverting on itself. It's just been a very irritating name to trade. All right, let me see if my camera works out. Okay. There we go. Hello. DLTR. I'm a little scared of these like Dollar General stores. Like the not Dollar General specifically, but like with the shipping costs and all this stuff and like their low priced items, and this thing has been, I mean, I feel like the market maybe been pricing that in. That's why we're seeing it so far down. I will note that it is getting very tight right here. So is this going to be a trend continuation to the downside, or are we going to see a little bit of a breakup pop, like sort of move like we did, right here? So that's like just a quick look at Dollar Tree. The 5-day moving average, it's holding, right here. It's starting to curl itself over. So now it's like, would I enter here? Now I prefer to see strength, right? So we saw the strength. Now it's pulling in. Now it's like, okay, so if we start breaking above this little area right here, this pocket of 108 or so forth, or even a little bit high, a little bit lower than that, then maybe that would give me the insight, because we're like, okay, if I enter in for a swing trade, I can have my stop trail the 5-day, right? But first I would want to see it actually see strength through that. It's not there yet. But it's setting up. It's setting up. It's really everyone will just pick up a name and be like, yeah, now. SMCI, yeah, SMCI is down near the lows of the trading session, about 8% down. Nvidia, just at its lower weekly expected move, just slightly above it. Actually, if we get a flush underneath it, there'd be a positive divergence in the forming out there on the RSI on the 15-minute time frame. And we already pointed out a bunch of different areas of confluence too. So Nvidia with it's such an important name in the market. That's why it's literally just one name is just driving this. It's crazy. All right, let me see once again. So yeah, like I said, Berkshire was one of them. What else did I say? Just a couple of names, man. Chubb, right? So Chubb. A little Chubb there. Okay, a couple other names. I want to pull up MRUS. MRUS had a nice breakout not too long ago, and now it's been kind of consolidating. We just pulled back into the 20-day, and we're seeing some follow through here today. So to come back up to 58 might make a little bit of sense, and you have a stop at the low here and potentially even go to 61. So this one looks, pretty actionable. Kind of wedge, flag, boom, flag again. So MRUS looks pretty decent. I have no idea what they do or who they are. Next, a little bit more crazier. Not quite interested in this one, but it was consolidating. MMYT. This one got hammered in, came in a little bit, and then also is kind of tightening up there too as well, and in somewhat bullish context there too as well. Yeah, nothing's just piquing my interest right now. I have an eye on a lot of names too. NRG. You know what name was crazy? Is NNE, and I didn't tell anybody about this because this was like a lower price name. Oh my gosh, it's up 30% today. I'm so irritated, dude. I should have traded this. I was looking at it over here, but I didn't want to bring it up because it was such it moves so quick and so fast, and it got started getting really crazy. It's like a nuclear name. And then on this day, like before I even had time to even do anything, it was already up here. Like it was such a fast move. And then I noticed, I'm like, I'll see what it does, see if it consolidates or anything. And the thing just blew through. Like, what the heck is this? Even if I were to, you look in hindsight, it's up 137% since that day that I saw it. And no, I would not enter now. didn't even enter right here. I was hoping that we see a little bit of a consolidation. That thing flew through the Richter scale. That thing just ripped. Holy moly. And it's up 30% today. Go figure. Rub it in my face. Nova Nordis, NVO. This one had a nice breakout, and now it's consolidating. So yeah, maybe this is actionable. All right, little consolidation over here. After a breakout, so strong stuff typically gets stronger, right? So NVO, I'd say that'd be on the watch list. So it's Chubb, NVO, Berkshire, some random names, man, some random stuff. It's not like your typical like names. Like I can go to like utilities names too, like, you know, not PCG. Not PCG. I'll go to some utility names, but I was thinking actually Procter & Gamble, which is a consumer staple. Just coiling up there. Some of the energy names, so VS, I'm not 100% positive. It may not be utility, but I have some utilities kind of mixed in here. So I have VST that's been consolidating, nice little pullback here into the 50-day. ETR, that's seeing some strength today. Then SRE, okay, that was one that I was definitely had on the radar. I'm going to write that down. Maybe I'll take some small positions in these names just to have a little bit of exposure. A retail name was Ralph Lauren. So the reason why I'm saying some retail names is because they are nice consolidation. So I would potentially look at this as an actionable setup or maybe early breakout material, right? Because it's just giving you like if he gets out, you get out. If it's in, you know, I could see a nice big pop there. Or back above the 5-day, it's starting to turn around. Maybe it cools off a little bit, sets back up there. So Ralph Lauren looks pretty decent because I missed Foot Locker. So I got to wait for Foot Locker to set up. And then Gap is still coming in here. So I mean, it's more on the radar. I'm not going to buy it right there, but it's on the radar. And then for like a counter trend move, we were talking about Snow. Snow is still coming in below its 5-day. It held. Just got to let it do its thing until it sets up a little bit cleaner. Man. I'm trying to think retail. Skechers. It's kind of went far and fast. Crocs. Oh, you know what was one that was interested in me was eBay. Let me see what eBay's up to. eBay looks pretty clean. It hasn't really gone anywhere for a while, but it's been building this base and we broke out of it. And this one's been kind of going sideways here. And also once again, kind of just sideways chop there. Let me see the 5-day moving average is coming in a little bit, still holding it. A little bit of a divergence actually that formed there. So it'd be interesting to see how this one consolidates. The weekly time frame feels extended, but feelings don't really matter. Okay. Let's see if there's anything in the comments here. See if anything we good. Trump said nuclear power is good. Oh, is that something said something about nuclear and that's why NNE is just blowing through the Richters right now? Who remembers Steve Madden? That's a random one. SHOO. I mean, why does that? That doesn't even look bad. Right? This one's kind of flagging out. Wait, is this? Yeah, Madden Steve or Steven Madden. Right? Consolidating there for whatever reason. Somebody had mentioned Macy's. Macy's is a nice pop today, but it's kind of just sideways trisection. I like the look of Nordstrom's because Nordstrom's also, I believe, has a pretty high short interest, if I remember correctly. And this one's getting pretty tight here too. So some of these retail names, they look like they're setting up for, you know, a little bit of a run here or the potential for one. I already looked at this one, SRE, Snap. Even, oh gosh, heavens no. Snapchat even looks good. Snapchat getting pretty tight here. Surprisingly, it went up on earnings, the prior earnings move. She makes me think about Roku. Let me see what happened to Roku. Nothing good. Pinterest did pretty good. Pinterest actually had some follow through. So you see how like sometimes these earnings move, you get these consolidations and you follow through. Well, Snap did have a nice earnings move and it's been consolidating. And now it's, I wonder if we're going to get some follow through here. I wouldn't hold it into earnings because I'm just not that type of person to trade it into earnings, but maybe we get a little pop before that. I mean, it is getting pretty tight here. And it's from the bullish move, and it's had nice follow through. Volume's dried up. You have pockets, and even like these days right here, they were green days. So you have a good day there, you had a good day here. Those are right off these trend lines, good volume. All right, I'll put that on the watch. On the kind of actionable list, which makes me think about Snap SRE. No, God, I keep on typing SRE. That's not what I meant to type in. SEM. That's what I meant. SEM looks pretty good here too. Medical name. Kind of actually broke out and then it flagged here, and then we're seeing some follow through right now. I don't like entering right then, but not bad looking. Okay. We got some other names coming in from, people are asking about some names, so we'll pull up some of these names. Let's do, we'll start with Uber. So these are yeah, Uber looks pretty clean. This is why I'm like DIY is mispriced. Look at Uber, right? Uber is getting very tight right here. So this looks pretty killer, right? So you get these strong moves, boom, 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 follow through, and you get some nice consolidation there. It's holding the 5-day moving average. It respects it. Looks like it respects it here. So this actually is looking like it's pretty actionable, Uber. But then I look at like DIY. I'm just trying to think like value, right? It's doing the same thing. It pulled in. It saw a move, and now it's consolidating pretty tightly here too, except it's, a Chinese equity, and, it's not as easy to trade, and it's on the OTC market too, by the way. But it's a huge company. It's big. It's like how big is their market cap? DIY is like, I think it's in the billions. It's $19 billion market cap on the OTC market. It's cool. Rock on. Makes sense. Guess that's what happens when you do fraudulent things, I guess, with accounting. ARLP getting very tight here too as well. Okay. Some of these names I'm not much fan of trading, but they are setting up. S&P 500's kind of settled down for the day so far. We're not too far off the upper monthly expected move, people. So, I mean, like I said, it's we're going to probably be going from one of these weeklies still. We still have a lot of data to come out this week. And then the higher probability is always that we come back in these expected moves. And the upper one is 542.65, which, this is the final week of June, I believe. I'm going to pull up some of these names that people are asking about. Okay, MTCH. I will do viewer names. Yeah, you guys are actually pulling up some decent names. I mean, decent setups. So this one, I mean, it looks like it potentially be setting up for a move here because it's getting pretty tight, right? We say pretty rough earnings, right? Boom, in a bad trend. So typically things get weaker. All right. But, if you're playing this from just a risk reward, type standpoint, like I can see why maybe you play the 20-day and just see if it can pop up back to the 200-day. So you'd be a little bit more aggressive on stuff like this. Back above that 5-day, starting to flatten out here. So yeah, I can see the appeal to trading something like match back into and around these areas, right? If it just flags, boom, consolidates. But I do like it. You just got to make sure that you really are paying attention to that risk, because if it starts breaking down, we can easily see that flush there. So, the trend is the trend. You're fighting against the trend. So you got to always consider that in your positioning and so forth. or your analysis. Eli Lilly, yeah, this thing is just stronger than strong. King's continuing up to the up to the upside. This is, I like the breakouts, right? So the breakouts, huge follow through. I wouldn't be entering here. I'd be looking for the consolidation, but overall, very, very strong. Look at healthcare, right? Did a pretty similar situation. I think the last time we talked about XLV was down here when it was getting very tight and wedging. And it was annoying because it kept on gapping up, closing at the low, gapping up, low, gapping up, closing at the low. And I was like, it's probably gonna get a move going here, and it's just faking out a lot of people. And then it moved, tightened up again, and we're back up into these areas. Kind of looks like MRK, PINK had a pretty big breakout there. It's getting some follow through too. That's a Simplify Healthcare ETF, which is also another one with a little bit more juice in the tank there. ALNY, a pharmaceutical company. I'm assuming that they passed something or some sort of something came out, because that's a crazy move in a single day. So yeah, up 35% on the day. Yeah, I don't, this is like stuff that I might trade, but now I just kind of wait. But yeah, a little crazy of a move there to just enter in this current moment. But typically, like I said, now I wait to see how it consolidates and maybe see if we get some follow through. Doesn't mean that it has to consolidate right here. Sometimes you get follow through and then you consolidate and then it can do something. But yeah, a strong move. And now I kind of wait for things to contract. So ALNY, XOM is up today. Yeah, XOM we talked about a little bit earlier. We talked about that one on the market brief right here when it was pulling into that retracement level. Between that and the golden zone, they call it. See a nice little pop from that level. We did the same thing with energy and CVX. NEE is a utility name. Utilities have been very strong, and I think utilities could be a very, play right here. But utility, this name specifically is like this big gap down and then it came back up. I don't like going in, on moves like that, but sometimes that happens. You get these fake out moves and then it goes on its rally. So I look at this now, I'm like, okay, shorter time frames, it's a little overbought. So I'd prefer for the 5-day to start turning up and this to just chill out a little bit, maybe build out a little bit of a base for a day, 2 days on the 15-minute time frame, this turn up and then be able to enter in. And if it gets away from me, it gets away from me. But yeah, it's overall, look at the weekly time frame. Right? So it depends on how you structure up your trades. The weekly time frame pulled in, nice little doji indecision candle, and we're getting follow through. We broke above the high of the prior week. So yeah, if you're looking at this in terms of like a larger time frame, you can enter in right there basically, right when it broke the high. You can have a stop at the low of the week, which is technically today, or even give it more room, but that's a pretty big drop. But yeah, that would be, your risk, and then you could potentially play it all the way up, right? So just look at multiple time frames, whatever fits your style best. TJX, yeah, that's a good retail name to talk about. I'd be just waiting on this one too for consolidation. Another strong name. It's been getting away. It's been going straight up. A lot of these retail names have been seeing this strength. So another, good name. Would I enter here? No. Would I wait for a consolidation? Look to see how it sets up? Yeah. And play for a continuation of some sort. And you're not wrong, right? You're not wrong for entering here. It's just understand, are you holding it for a long time for a follow through? I just prefer to see these consolidations and tighten it up, because then it tells me where I can have my stops. Because I look at this now, if I enter here, I don't really feel like holding a position down here to 108, even though that I think that it might continue to the upside. I prefer to see it set up, or you can put on a Bollinger Band. You can put on, bridge bands, right? So if I pull up bridge bands, you can play the lower ends, the lower ranges, the high ranges. That's what I post in my zone document, right? It'll tell you, but I don't like looking at this specific indicator on my charts. I like doing it the way that I do it, where you get a good fractal view of the market. For those that are in the Discord, it looks like, I'll just download it really quick. Let me show you what it looks like. Actually, I'll do that in a minute. Just remind me. I'm going to show up the rest of these names. VFC, and I'm probably going to take a little bit of a tune off here, break. Need some air. Yeah, VFC looked pretty decent. Still a downtrend, but we did have a nice little consolidation there, and we're starting to break from that. So nice little catch if you were able to catch that and play out of this pivot. Would I enter here? No, it's still bearish trend. So the current, the undercurrent is against you, right? It might sweep your legs out, even if you come up into this area, right? But doesn't mean it can't change, because the smaller currents, right? The 20-day, the 50 days flattening out, and we saw the follow through. So These type of setups, like I'd trade this, but it would be a little bit more aggressive. I'd get out a little bit quicker. With some of my position, I'd get out a little bit quicker, maybe have a little bit left on to see if it can change or do something bigger. But yeah, that nice little pocket breakout right there. Just in not the greatest trend. UAA, so is that Under Armour? Okay, my bad. I was thinking airlines for a second there. This actually looks pretty decent there. Okay, so this to me is a little interesting. So the trend is neutral for the most part. Like the 200, yeah, your undercurrent is kind of against you, right? So this is Under Armour, obviously a big company. Surprisingly enough, so the previous owner of Under Armour worked with, he was, or maybe he still is the Under Armour creator. Can't remember, but he also runs a brewery and now, because I saw him on the Cameron Haynes podcast randomly on like an Instagram reel. And then I looked up his brewery and I saw his tanks. I'm like, oh my gosh, it's so funny. I called my brother up. I'm like, dude, did you know you just sold a brewery set up, all these tanks to the previous owner of Under Armour or the creator of Under Armour? He was like, who? He was like, what brewery? And I told him, he was like, oh yeah, the guy's hella cool. I was like, dude, that's crazy. What the heck? You didn't even know? He's like, no, I had no idea. He just wanted to brew some beer. Now I got to look it up to see what brewery it is. But okay, back to this. The earnings move here, do you see how it gapped way down, but then it closed at the high? Those can spark reversals. And that to me is a little of interest. So, I mean, you get in these weird gap downs and these close at the highs of the day on some decent volume, but that is maybe worth noting there. So what I would say is maybe anchor a volume weighted average price. Let's just do it. And then SPY's still coming in here, or S&P 500. So we're really not missing anything right now, unless if you're trying to trade it very actively, but I'm not. So UAA. Oh, wait. Yeah, okay, UAA. Okay. So where was that day? Right here. Okay. Okay. A little choppy, but you can anchor a volume weighted average price to earnings, and we're clearly above that right now. I don't like how dirty it looks, but maybe we'll just anchor. No, we already have an anchor there today. Okay. Man, it's just so sloppy and choppy. So here's what I like. On the shorter time frame, it is above the rising 5-day. It's holding above currently the week-to-date anchored volume weighted average price. So basically, my stop would be at the low of the day. If I entered in long, it'd be at the low of the day. That's kind of how I would look at it. But I like these type of things can spark potential reversals. I think the same thing happened to Chewy, or maybe not Chewy. It did actually, yeah. So over here, it was an earnings move, it gapped down, and then we saw some follow through. It didn't mark a bottom, but it did see it follow through, and then it started getting tight over here. And Chewy then started to make some real moves. Recent trade, it happened to Unity too, I think. Yeah, over here. So you see how it gapped down on earnings and then closed at the high, and then it coiled up here. This is where I kind of had eyesights on it. And then it boom, broke up, flagged, boom, we saw another follow through. So it's a nice trade, but understand that the trend was still neutral, right? It wasn't like a very bullish trend when this happened. So yeah, it came back down, right? And we're back down there again. So I look at UAA, and I see this happen. I'm like, oh, maybe we're gearing up for another little pop. Maybe that could be the thing. But pay attention to the trend, right? The trend is still neutral to slightly down. So a low, stop there, a stop there, or maybe even a stop there if you really think it's going to get a big pop. But we can play maybe a gap fill, maybe back up to there for something like UAA. Choppy and sloppy overall. Keep that in mind if you're positioning into something like this. It's a little all over the place. Costco, gotta get my hot dog. So Costco is also very bullish, and it's just pulling back here. So yeah, one to watch if it's gonna have a continuation. I'm always hesitant when it's run this high, and then look at the weekly time frame. The weekly chart, this is like, okay, let's see here. So not the greatest looking weekly candle, right? So you have this big, went way to a new high, closed at the lows. We're getting some follow through today. Okay, it doesn't mean that it can't come back up, but this could mark a potential turning point of consolidation, digestion, or so forth on the weekly chart. okay, on the weekly chart. You can see this one reversed, this week reversed, and it came down, followed through for a couple of weeks, and then it flagged out, and then we saw a nice move there too, okay? So I think that's worth paying attention to, but right now it's just pulling back, makes sense after a very strong move into a 20-day. And I would say I wouldn't be interested in buying this dip. I'd be more interested if it sets back up for a nice base and then breaks the trend to come back up to the top, like so. God, man, I just wish there was a little bit more action going on. So there's Costco. Overall, strong, right? If you're in it, it's probably a hold, right? And you're just going through the consolidations. I mean, it's up so much. So TT, Train Technologies, also very strong looking name too. So bullish trend, good find. Consolidated. Now it's consolidating here a little bit more. It's not too, it's like a day or two separated from its high. So yeah, probably we'll take that out at some point. 5-day moving average. Take a look here. It's getting pretty darn tight right here. It's back above the 5-day moving average. So if it breaks out, maybe you play the pop up. If it breaks down, maybe see how it consolidates and works itself back, if that's the case. But it is getting fairly like crazy tight right here for Train Technologies. I'm not too sure if Ian, like a solar stock trades inversely or like a negative correlation with oil. We can find out right now, actually, if you want. Yeah, S&P 500 is still going chopping around, people, just so you know. Not, like I said, not really shocked or surprised there. Still doing its thing, chopping around. The June upper expected move is right here for S&P 500. It's for SPY, it's 542.65. We're basically right there. So the question was the correlation from energy names to oil. So I can show you right here. I'm just going to pull up TAN and use that as the ETF, and then I'll show you the correlations all broken down like, I don't know, 15, 30-day, 90-day, probably important, and then I'll do 120, and then 180. Okay, so there you go. The answer to your question is, so I'm using TAN Solar ETF, and the question was, do they trade inversely to oil? The answer would be, yeah. There is a little bit of a negative correlation. Nothing crazy, but you can see on the shorter time frame, 15 days, that is a pretty strong negative correlation. So meaning that if oil goes up, TAN could come down, or various solar names. Because there's about a 0.75, so negative 0.75. So it's almost like but it goes positive sometimes too. It kind of just goes back and forth. But right in this current moment, there's a pretty strong correlation. So if you go out, 30 days, not as strong of a negative correlation, but you can still see it's prevalent. 90 days, it's a negative correlation here too as well. 120, negative correlation. And then 180 days is recently negative, but there was a somewhat of a positive correlation there recently. So yeah, it does right now, at least. And correlations change, but in this current moment, there is that negative correlation between the two. Cool. Take a look at NU holdings. Yeah, what's NU? Pull that up. Weekly chart coming in pretty hard today. I'm not too sure if there's some news or something, but yeah, NU looked like a really good setup. It looked actually like a great breakout here too. This is why you got to manage risk. This thing's squatted right on its face, sitting at the lows of the trading session. You get these breakout, fake out moves. Really strong move, and then it just came way in. So I wouldn't be one to just jump into something like this right away. I'd just give it some time. And these type of moves, if I played this breakout, which I obviously didn't, but if I played this breakout, which would have been a great setup, I mean, it would have been a great pop. I mean, this little move on a breakout, was like, 6%. I mean, and I typically take profits, like some profits off the table at around 4 or 5%. So, and then it reversed completely on its face, so it depends on where it closes, but then I would say, okay, let's see if it sets back up, and this is just a one-off that shakes some people out. But yeah, when I see this, I'd be like, ugh, I don't like that, and I typically get out of the positions if I played a breakout, and it just flattened, pancaked on its face. I wouldn't be a fan of that. I just not a fan of that. And unfortunately to me is sometimes that's just a fake out and it turns right back around, and either I'm prepared to enter back in or I get just tripped up and I miss it. And I'd rather miss it than for it to go for me to hope that it goes higher, right? But yeah, it's a good looking chart, good looking setup, look very tight, and now we're getting a pretty I don't know. There must be some sort of news for a move like that. It's a pretty wide candle to come up 6% and fall on its face. So, and if there's no news and nothing's trading on it, then yeah, keep an eye on it, because it can potentially just be faking some peeps out or something, But yeah, I wouldn't enter in at the lows of the trading session just because of the current price action. Looking at it now, it's just not my game, not my style. Okay, let me look at Capital One Financial really quick, because this one I was interested into as well. I mean, it doesn't look bad. Looks like it's just kind of taking a breather. So, what makes me say that? Kind of just holding up this little trend here. It's back below, it's trying to get back above this 20. 50 is still declining and did hold. A little bit of a higher low on this pullback, and we're trying to break this. And financials is kind of doing pretty decent today to start the week. Financials and energy, even utilities. The names have not been getting love, like the sectors that haven't been getting love. It's like, I feel like we're getting that kind of rotation today. 10-year yields flat on the trading session today. I just want to take a look at some gold, see what's going on there. A little sloppy. Silver had a big move the other day. Let's see what's doing that. Yeah, big move the other day, and then it reversed on its face. Still doing its thing. Okay. FDX, I missed that trade. I'll see how it sets back up again, but a nice little trend break there on FDX. I just haven't been too active in getting into some positions. But there's a lot of setups, man. There's a lot of different names to be keeping an eye on here. I think I'm going to just add a little exposure into some of the names that I mentioned, but I'm going to keep them not full-size positions. I talked about Berkshire B, so BRKB, right? I don't really necessarily mind just getting in on this little breakout move right here. And just, I'd prefer more of a consolidation, but this pullback is kind of whatever to me. And it would be a small position. So maybe I'll just take a little position there and try to like just see if we can trade back up, and then update my stop as price continues. I'll have a stop at the low of the day or maybe the prior day low. Depends on where we kind of close. And see if we can get a little bit of follow through on some of these financial names. And then Chubb, same thing. If I enter in, I think I might just enter in a few of these names just to have a little bit more exposure. I literally have pretty much nothing on. What do I have on? Gosh, yeah, I have like 20% exposure right now. Somebody had mentioned Disney. I have a position in Disney. I played this little move right here. It's kind of breaking out a little bit. I'm up a little bit on it. It's coming in a little bit today. It's at the low of the trading session today. Above a rising 5-day moving average. It's pulling back in. So yeah, I have a spot in Disney. My Disney position is super small. Super small. It's a 3% position. So I have a position in AT&T, which I might take some profits because I forgot about it. But AT&T was one we talked about down here, and how we said it was a breakout, potential back test. And we saw some nice moves there. So I'm gonna pull that up. Yeah, I'm up almost 6%, so 5.5% on that position. It's up 1.32% right now. That's a full size position I have on still. I haven't trimmed it at all. So I'll trim a third of that right now. So that'll be one of the active things I'm doing right now. It's above 5%. I like to take some profits off, and then earnings is around the corner too. Still looks great. So now that I'm trimming and I'm up 6%, I might hold it into earnings depending on where it's at the time. So I'm going to go ahead and cut that off. Some of that. So that just took place. I'm in SoFi. I'm up about 1% there. Beyond, it's such a small position, dude. Beyond is like literally nothing. It's down 4%. But let me tell you how small that position is. I'm down $60. That's how small the position is. I was thinking maybe I can build into it, but I don't even know if I want to build into it. I did with CELH. So I'm in here, and I'm down $60. It's literally nothing. Should I just cut it? No, I'm not going to cut it. It's a little positive divergence there. I'm just going to let it go, and then maybe it sets back up. But I kind of wanted it on the radar. It was more of one of those, like, sometimes, like, if you're kind of have the, antsy to buy, just do a starter, like very small position, just to have it on your screen so you can track it. So I did that, and I'm down like $60 total today. Okay. Oh, sorry. $70 today. Or not today, total. My bad. CELH, I do have a position there. That was a little bit bigger than Beyond, and that one is down. And I'm still debating whether I want to just hold this or cut this too. These counter trend moves, I'm not a huge fan of. I thought I was up on this, but I must have. Oh no, I took profit on it. That's why I took some profit on it. So technically, I'm pretty flat there. It's just today it's down. I'm just gonna let that go too. It's a small counter trend bet. It's just if if they get moves. Okay, so those are some of the names that I have on. I have Tesla. That's up a little bit as well. That's a decent sized position. It's a little bit bigger than these counter trend moves because I'm playing this shorter term trend to see if we can pop through it. But Tesla, like I said, it's pretty low conviction, but I'll see. I'll see if I can get anything going. Right now, it's just basically at that 5-day moving average. It honestly looks like it's going to crack down. So I'll see how that goes. But I'm just going to leave it as is right now. It's not a full size position, but it's bigger than my Beyond and the counter trend trades. Like I have 3 counter trend trades on Beyond, Celsius, and SoFi. They all don't even equate to one single full size position. Just so you all know, that's why when people say, show me your losses, it's like, okay, they're not that interesting. They ain't that interesting. But those look like losers to me, and they're still on though. Okay, AT&T. So AT&T, I took profit. Disney, I am not touching yet. Disney's pretty low beta. I'm up 1%. That's a small position. Like, I don't know why, actually. I don't know why Disney is this. My Disney position is smaller than my Beyond position for whatever reason. Or maybe I forget, dude. I must have taken profits. If not, I mean, I could probably just add to it, to be quite honest. I wouldn't even mind adding a little bit to it. I don't even care where its price is at for the day. Pulling back into a rising 5. I'm just going to add a little bit to Disney because I don't even know why it's so small. I can't remember if I took some profits off, and that doesn't even make sense. I didn't take profits off. I think I started the position just to have it on my radar and add to it if it sets up or whatever. But I like the looks of it, so I'm just going to add. I'll double what I have on right now, make it a little bit bigger than my other position, the counter trend moves. So I'll add into my Disney. Okay, so there, I took off some AT&T. I added a little bit here to Disney. So I'm still basically exactly where I was as far as position sizing or cash position. All right, let's take a look here at these other names that I pulled up. Once again, Berkshire B. I think I might structure Berkshire B on the weekly time frame. Oh my gosh, this is such a low beta name. It'd be down 2% if it comes down there. So I'll take a 3% risk on it on the trade. So I'm fine with that. I'm fine with that. All right, I'm gonna just have a little bit of that on. I won't take a full size position there, but I'll get some exposure just to Berkshire, just to have it on Berkshire. Class B. Let me just make sure here. I don't really care about being too tactical. We have a little bit of a pullback. I honestly think that if you wait on something like this, you'll probably get a little bit better entry. But I'm structuring it. I'm structuring on the weekly time frame. Stop about down 3%, so about 401. Okay, so I'll buy a few shares. So this will be probably about a 4% position. And I'll try to get into 6%. Nope, that's wrong. If it pulls in a little bit more and then start to see strength from there. Okay. Okay. That's not what I said. There we go. Okay, let me just check the spreads. That's fine. Cool. Okay, so I just put a little bit of exposure, like 4% into Berkshire. Nothing crazy. Okay, so I just wanted a little bit of financials because I don't have anything there. I want to see Chubb. So Chubb would be insurance play. I also like this too. I like it more structured on the weekly time frame. I don't love the entry, but then again, it's, let me see here. I mean, it's just, okay, so if I get stopped out on this swing low, I mean, we're talking minus 3% and I'm not taking full-size positions right now. This isn't like high beta stuff, just so everyone knows. It's very low beta. If I pull up, like look at Mara. It's so funny. I'll pull up a high beta name and show you what I mean by this. So it gives it room to run. So Mara, if I get stopped out at this swing low, like I don't have a position on, but if I were to take a trade from right, how do I do this? Come on. What? Come on. Come on now. Why does Thinkorswim do this? I click to annotate. I can right click and it works fine. I click and it doesn't work fine. Okay, whatever. So basically if I enter it here, it'd be from 1857 down to here would be 17. So 18 to 17 is a much, much bigger, obviously, swing. Oh my goodness, dude. Dude, what the heck, man? All right, SPY's still going sideways, doing nothing, coming back into its upper monthly expected move. I want to prove my point here. Mara. Okay, Mara, daily time frame. All right, here's my point. Okay, boom. From where we are right now down to there, that's like a 5%. So very tiny move. It's, 5%, right? Or here, it's like 9% or 10%. So my point is, these aren't like the highest beta of names right here, meaning that they're not like, they don't move much more than the S&P 500. Like crazy. So I'm structuring those on the weekly time frame. I didn't enter into it yet, so let me take a look again. So the market's pulling in. Okay, where are you, dude? Where's my Chubb? Don't clip that. Okay, so chubs. Trade. So I just want to get a little exposure in here, dude. Maybe bump it up to like 50% exposure to the market. So 50% cash and have some names, have decent diversity and some insurance, maybe some healthcare stuff. I have these counter trend trades of some crap stocks, but I'd rather have like names that have been showing a little bit of strength, in the mix. So I'll buy, let me check to see how much this would cost. I'm starting smaller, 4%. Yeah, I'm just doing 4%. It's a small position, people. Small position. 4%. And then when more time goes by, I'll see if I can add to it or just get out. So there, I have now, I just added in 8% more. So now I added more to my portfolio, about 8% between Berkshire and Chubb. Pretty Warren Buffett heavy, if I ask myself. Or actually, come to think about it, dude, is Chubb in Berkshire Hathaway? I didn't even think about that. Because I'd have to look at the holdings, but didn't he just buy it? So now I got more exposure to Chubb, probably. But that's fine. I like the setups of both those charts. It's like if I were to pull up ARK, right? And if I like the setup of ARK, there'd be some names that I don't like the setup of, and there'd be names that I do. So I could, it's the same thing. But yeah, small position. It's Berkshire. It's Warren Buffett heavy. I just added 8%. Okay. So yeah, I got a little bit more than I expected with Chubb because I just didn't think that through or look at the holdings. But that's fine. I like both of those. But both how they're setting up is fine for me. I'm not going to add Apple because that I already know is in there. But you never know. It might be a beta play if it sets back up. All right, let me see here. Okay, I wanted to add a little retail, and I liked how Ralph Lauren was setting up. Getting back above the 5-day moving average. You had these little matching lows right here. Broke above that. Now we're kind of trying to flagging out here. And then if you go to the daily time frame, it's holding up in decent context. Now, what is the stop if I get stopped out over here? That's 2.5%. Also, not that bad. I mean, maybe a little bit lower, about 3% loss. I want a stop loss out in that range. Once again, it's not crazy to me, and that's pretty normal type of move. Even this day, that was a pretty big selling day, but there was no volume behind the move. This day had some decent volume. Yeah, this looks clean. It looks clean to me. Yeah, so I'm going to go ahead and add a little position to Ralph Lauren. I'll have a little bit of exposure there. Like I said, once again, these aren't full swings. They're not full-size positions. Actually, to let me give you an idea. Let me just tell you how crazy this is. My 4% position, if all of these stocks went down 50% tomorrow, I'm holding okay, first off, okay, so how would we do the math here? Let's say it's $100,000, okay, and you buy 3 positions at 4%. So 444, right? And each of those positions drop down 50%. I'd be losing how much of my portfolio? That'd be a total of $6,000 out of 100,000. How much would you lose? If the stock were to fall 50%, it means I would lose 6% of my portfolio, or those, basically of the total realm in that context. So that's just to give you an idea of how mitigated these are. Will I build into full positions? Potentially, if they set themselves up. All I'm trying to do right now is move from 20% cash into just a little bit more space. Because the market's been pretty bullish. We're still above that rising 5-day, we're still above the gamma flip line. And the names that I'm entering into are the names that have been showing consolidations, right? They're tightening up and they're trying to make moves here. They're above their 5 days. And that's it. That's really the only process behind that. So I haven't added yet, or I haven't made this position yet. Let me see. Let's check the spreads. I don't like the spreads much. It's about, it's 30-cent spread. So, it's such a small position. doesn't necessarily matter if I hit the market, but I'll try to get a little bit better of a position there. Let me see here. Yeah, okay. That's not what I want. That's not what I want. There we go. Did it fill? All right, there, I got in there, 183.95. So I got a little bit better fill. That was actually a pretty good fill at the current spread. I mean, that'll change very quickly when spreads move, but okay. There we go, added some there. And then the other ones was SRE, which would be nice to have a little exposure to some. Is SRE, I forget, is SRE the utility name? Yeah, it is. Okay, so I am going to have a little utility name too, but it is starting to move already. You people, calm down. Ugh, I hate that. It's okay, minus 3% there. All right, I'm gonna just do it. Yeah, I'll just do a small position there too as well. I'm about to call quits here on the stream. I'm just, like I said, I wanted to add a little exposure to some of these names, show you kind of my process, show you it's not high risk anything right now. Just getting a little bit more exposure in because it was pretty light going into this week. Let me check out Snap too. I'm not really much of a fan of these. I'm not going to do Snap. I'm kind of going off the wall on some of these names. Not off the wall, but I'm kind of going in places that aren't like, you know, popular, quote unquote, like super popular names, you know, meme type of names or whatever. All right. Yeah, I'm going to do SRE. I'll put in a little there. All right, and just so you know, so it's a small position on all of them. It's not even it's basically a half size position, maybe a tiny more than that. And it's, I'd probably look to add if it sets up correctly. But it's a starter position, very starter. And then I don't even have full size stops on them. They're literally like 3% stops. So I'm getting exposure. If it goes in my favor right out of the gate, cool. I'll look to add and bring in more exposure to the market. But right now, I'm playing it a little, kind of just careful. It just, the spread is very tight on SRE. Okay. Cool. We'll take a look at the markets, see how they're doing. I just added a couple of positions. Like I said, nothing wild. Berkshire, Sempra, Ralph Lauren, and Chubb. And then I trimmed some of my AT&T. It was up almost 6%. So I cut that. And that was actually a full-size position. So that was pretty cool. Okay, let's take a look at the market, and I'm just going to let those things go. Whatever happens, happens. They're about a 3%-ish stop on those. Low conviction. That's why I'm doing it that way. Okay, SPY, S&P 500 sitting almost basically at lows of the trading session still, just chopping around here in this range. It's been chopping, okay? So did market net flow give us anything new here? Not really. It's the bearish divergence, but they're both under zero. It's not good. It's just not good. It's just cruddy looking. Just not giving us sort of an edge, okay? Let me pull up SPY here. SPY. Man, this thing went far and fast, so to see some digestion makes complete sense, okay? And then we have quite a bit of macro stuff coming out this week. We're trading right around the upper month to date expected move. We're below the 5-day moving average, but the 5-day moving average is still in theory inclining. So it's bearish down here, but with caution, because a snapback, don't be shocked. Don't be shocked about snapbacks. Now, I still think it's very, very highly likely that if we break down, we're coming down this lower weekly or this upper weekly. I think we're tagging one of those for sure this week. Right now, we're slightly down on the trading session, about 15 basis points, literally a chop session. Market net flow suggests that. That's what it is. We're in between the 0-date levels that was marked out in the morning. Okay. Down to the downside, if we get some more sell side, keep an eye on the flip line. The flip line is going to be an important level. That's 54.50. Okay. You can look at this chart that I have, which is S&P 500 from Owanda. This is just a chart on continuity, or you can just look at, CBOE's SPX, which is bigger, right? Obviously, the big boy product. 54.50 is right over here, about 6 points away. Now right over here. So this would indicate that if we break below it, we can see volatility increase. Okay, so volatility can increase, liquidity dries up, and we could see more volatile swings in either direction. Okay. Yeah. Okay, so overall, I'm looking at my portfolio, one little quick hit here, and I just want to see. Yeah, I'm like 45 to 50% invested, somewhere around there, 40%. I gotta do the math when it. Oh wait, no, that's the wrong one. I don't think it updated. No, that's right. Yeah, 30%. I think it hasn't fully updated yet. I mean, I'd have to do the math. Yeah, about 45%, 40% invested. So still mainly cash. I can take the volatility right now. Just added some exposure, pretty diverse, like I stated, just to have something on. So I picked some names that were above a 5-day moving average that was inclining, that were tightening up. And if volatility goes in my favor on a breakout, cool. If it doesn't, I just get out and I'll look to reset up just to keep my P&L curve kind of moving in the proper direction. But I think that's all I got for you guys on today's stream. My camera came off, my bad, again. Let me see if I can reset that. But I'm gonna be cutting the stream here anyway. Here we go. Yes, I get some other names coming in here. Yeah, Chubb. Yeah, Chubb is only 2% of the Berkshire. Okay, so Chubb is like a small portion of Berkshire. Thanks for looking that up, Ken. Yeah, nothing crazy, right? See anything else over here? NCLH. Yeah, NCLH, I like the looks of it. NCLH, and then, yeah, look at NCLH, man. This one's a strong one. These cruise ship liners. This could be the early stages, man, of something big on NCLH, right? We're trying to get back above these averages. It looks good, and it's been tightening here. Norwegian Cruise Line. This has been on the radar. RCL has been doing really strong, right? And then some news about Viking. I believe this is cruise lines too. So they got more of an IPO. And then, what is it? CCL. CCL's been holding up rather well. A little sloppy and choppy, but it's been holding up here too as well. So yeah, some of these cruise lines might be pretty decent. IWM, I'll pull it up for you really quick, Ren. IWM's just floating around that 200 marker, or 201. It's been a very interesting level. It's acted as resistance. When we get below it, we broke down. When we got above it, we broke up. Got below it, break down, and so forth. Give me a second here. Okay, guys, I gotta hop off. I got somebody here at the door. I totally forgot that was coming. All right, guys and gals. See you later. Thanks for tuning in. Moonraker, everybody. I gotta hop off. I'd say bye to everybody. Mackenzie, and Fed, Ken, Dan.